Oh man, I didn't mean to hit the start button. Hey, what's up? You guys can see me. Well, I gotta go. Let me start the intro real quick. That's funny. Misclick. I gotta go comb my hair. You know how it goes. Morning.
The charts are bold. Daily bands rapping stories untold. AI. Up we go, reaching for the sky. Every trade only never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Flying with a rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. The pulse ascending, mind on fire, never ending. Trees of gold, endless fight. Push on through the endless night. Flying with a rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with their AI. Up we go, reaching for the sky. Every train home never dies. On the edge edge as the numbers fly. Checking the charts, tracking the charts, midnight glory. Time to re-annul its spending. Mind on fire, never ending. Dreams of gold, relentless fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
Hey y'all, what's up? Good morning. Morning, friends. Hold on a second. How are we doing, everybody? Where'd my phone go? Weird. My phone is downstairs. What's up? Good morning. Simon. What's up, too? What's up? Option Z, Jim. What's up? Other Simon. Jim. Mark. Trade next. Jason. EC Trevi. Good morning. Mo, Dungeon, Sean Duncan, Nathan, Annie, Eric, Bonnie Tech, Rob Scalper, PB, Joyce, Fernandez, good morning. Vinny, Nadia, Sam, Aaron, Mo, Brian, J. Hicks, Aid, Botrix. Last person I say good morning is to the bot. What's up? Good morning. Best stream ever. Oh, you're too kind. How are y'all today? Oh, man. Yesterday, crazy day, right? It's like good, good-ish at the end. Like not really good at the beginning. We all had that nice little bull long up break, and then markets pulled back, and then went up, we went way down, then we went up for the rest of the day, and then it's just kind of like, that's how the cookie crumbles sometimes. But hopefully today is gonna come out a little cleaner. We hopefully see. Yeah. Let me get everything situated here. I don't know where my phone went. I thought I had it, but maybe it's downstairs. You'll run and grab it. My first day trading in my funded futures accounts. I have a live account with those guys now. It was up like 2 grand, give or take. So that was kind of fun. Starting out the door. Your first trade always has to be a good trade, whenever you're trading any account. So hopefully, just starting to build a little fat, a little bit at a time. I'm not taking too much risk. I want to make that my new challenge. On the side after I do the Tradeify thing is to how far can I take that account before before I take a payout, or like basically like, can I take this account on a journey that'd be kind of fun. I've been trying to think about people have been asking about the top step leaderboard and stuff. Should I try to aim for that? I don't know. After I go live with Tradeify, what's the next challenge you think I should do? Like in chat, what's the next challenge you think I should do? I'm live with Elite Trader Funding. Live meaning that not just funded, but once you get funded and make so much money, they move you to live because you're taking too much of their money. Live is like the ultimate step from a prop firm. Like 1% of 1% of 1% of traders get invited to live. This is my second live account with the prop firm. I've only been doing this for like, 6 months or so total with these prop firms. But, after some time, you make enough money to move you to live. And I don't trade all of them at once. That's why it's like it's not like I'm getting live in all of them. I just basically am working on Tradeify now. When I get in, I'm working on another one. What's the next one I should do? If you guys were to take a vote, what's the next thing you'd like to see me accomplish? Which corner of FinTwit or financial YouTube has not been conquered? Whose stomping ground do you want me to walk onto and then beat them at their own game. I love competition. Where should we go make a splash, guys? Like which would like look the coolest for Rocket Scooter? Top step leaderboard. Everybody keeps saying that. What are the payout requirements on funded next futures? The payout requirements for funded next are after 5 days of trading with a $200 minimum trade per day, you can take a payout of exactly half of your account profits, half your account profits, which is amazing. After 30 days of trading that, you can actually take all of your account profits. Oh, I need to actually, speaking of the next, oops, I forgot to. So you can find the next. I need to do something really quick. We're waiting. Anyways. Let me get real quick. I need to one of my accounts. Please fill out the agreement. One of my accounts is now funded. I gotta fill out some agreement. I don't know where to do it. Have target reached. Blah 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 blah. How do I go forward with it? Let me do this one really quick. All right. Funded next. Oh, sign your agreement. There it is. Sign the agreement on your dashboard. Okay. Let me figure out where it is. Give me 1 second. I'm going to run and get my phone, and I'll be right back. me a second, you guys. All right. Good morning, guys. What's up? What's up? So one of my funded X accounts that I passed, trying to get it moved to funded, and I can't see the account. Says profit target reached. Congratulations, your account has been paused. Okay. It doesn't say anything like, where is the... I've already done this before, and I can't remember how I do this. Maybe they haven't sent it yet. Let me see if I got the... Maybe I click on the account itself. Let's see. Try this one. See if this one does it. I'm looking for, where do I sign important notice? Okay. What's your profit target? Please wait until that time to see KYC and agreement appear in your dashboard. Okay, so it's not on my dashboard. Okay. Rules and guidelines. Whatever. Time for a video interview. I've already done it. I've already done all the stuff. I've already done everything I need to do. Yeah, whatever. I'll see what they say. All right. All in 300K accounts. Let's go. I think what it is that they're just so far behind because, I mean, they did this huge sale. Probably like, I understand what it's like because we went viral recently, right? And I know what it's like to overwhelm your customer service. Just to get like, you know, 100x the volume that you normally would get your business. People just, you know, can't handle that. I get it. There's a lot. They did a lot better than they thought they would. And it's always a good problem to have. I think it just hasn't been sent to me yet. Unless I'm just blinded and know where to look. It says, please fill out the agreement from your inactive account. I click the button. There's no agreement here. Okay. So once you pass, you deactivate your account. Then the note at the top says, profit target reached. Hooray, your account has been paused. But I don't see anywhere where it says sign agreement. Maybe I'm not looking at the right place. Account details, blah, 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 blah. Important notice. Nope. Stats. Yeah, I don't see it. Oh, well, I was kind of hoping to trade it today, but maybe it's a sign from the universe I shouldn't be trading it today. Maybe today will be another one of those crap days that blow it up immediately. Small cash account, 1.1 to 5K to 10 to 50K. That's always something fun to do. I've done that kind of challenge. Well, actually, believe it or not, that's kind of what blew up my YouTube channel years ago, was I was doing challenges like that. 5K to 50K, I did that 2 times on this channel. Once I think in 2018, 2019, somewhere in there. Then I used to do, I was doing a 6,700 to 1 million challenge. I did that, and I was trading that same account for like 9 months. I got it right up close to about 100K. And then we decided to build an app and Rocket Scooter. So once we did that, we moved from YouTube to Zoom. So there was like a period for about 1.5 years that I was streaming on Zoom instead on YouTube. And then once we released Rocket Scooter, then we came back on YouTube. And then, but yeah, I loved, those are fun challenges as well. And actually the audience really responded to that. Right now, the hot thing being prop firms. My challenge to kind of be in the realm of prop firms instead of the small account challenge I'm doing. Now, the live accounts that I have with ETF and with my funded futures can start getting more base time on the stream. And those, like the journey and those accounts, I can definitely follow, let you guys follow along with that. How many accounts do I blow up in a month? Maybe like less than 10. I don't blow up that much. Not much. Maybe once like one account every week or so. Like not a lot. I really don't. I'll trade all my accounts at once. So at worst, on the worst possible days, I'll bust like one account, maybe two. Hey, what's up? Well, hello.
I'm leaving you.
What happened to your shirt?
Getting pickle ready.
I have a stain on my shirt right there, and I don't know where it's from.
It's because when you wash your hands, you lean against the sink.
Oh, that's not water though. I don't know.
This sounds like your problem.
What's up?
I'm heading out.
Really?
Yeah, really.
For how many days?
Huh?
For how many days?
For about a week.
Just gonna wear cowboy hats
Oh.
and onesies on my stream.
Right here. I left the onesie out in case you're looking for it. It's on the guest bedroom.
I'm always looking for it. Cool.
Your other suits are there too.
Nice. Cool. Boy.
What are you gonna do about this dog?
He can hang out here, but he'll probably get restless once you leave and start barking because he'll think you're downstairs.
Yeah, he's already barking now. He'll do this all day.
So today, put him in his kennel and I'll grab him like close to lunch, and then let him sit behind me. If I put him behind me now, the first thing he'll do is run in that door and stare at him, start wagging his tail, like wondering where you're at.
Yeah.
Hyper needy dog.
You have like a break or anything, or you stop winning? Go down again.
If I'm winning too hard.
If you're winning too hard, yeah. Would you
Okay.
please?
Okay. Everyone, good morning, y'all. All right.
Okay, I was me.
Who will moderate the chat?
Well, I'll still be watching
Okay.
you from the plane.
Cool.
4 hour
Cool.
flight.
Awesome. Enjoy your trip to the North Pole, wherever you're going. Okay. Well, you guys, all right. Wait, give me one more second. 1 second. All right, we are back.
Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Hit the like button.
All right, what's up, guys? In the meantime, don't forget to smash the like button while we're waiting.
Rocket scooter. Yeah, yeah, yeah.
I'll answer some of your questions in a minute. Good morning. Welcome to the Rocket Scooter stream. We'll do a giveaway today like we do every single day. We get those likes up. You guys know the rules. We do giveaways every day on the stream. More giveaways here than any other futures trader stream. We get bigger and bigger every month. All right. Boom, 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 boom. I'll answer your questions a little bit, fellows, everybody. The people coming here really quick first. I got a couple of little tasks I got to do really quick. Get my DD band stuff here. Damn it. 3439. Here we go. I'm around this time every single day. That's correct. Every single day, Monday through Friday, even on holidays. Hit that like button, guys. Everybody smash it. 1, 2, 3, 4, 5. We need to get 500 likes on the stream, and then we'll run the giveaway. Chat, we're ready to make some money today. So what I'll do is I'll go funded with Tradeify, or I'll go live with Tradeify. That'll be my 3rd live account I get with the prop firm. And then I'll try to do top step leaderboard after that. How about that? That sounds like a good idea. This is like a fantastic idea. You keep telling yourself that that's DJ Boat's voice. I always try to imagine that it is. He's like serving breakfast to his kids. Hit the like button. The kids are like, they're like, you know, do you like it, kids? He's like, yeah, yeah, yeah. He's like, they're at Disney World. Did you guys have fun today? They're like, Dad, please don't play the song. Hit the like button. All right, guys. Don't get to hit it. All right, questions you guys had. I will look at some of your questions. Like, what's up, Tyler? Good morning. What's up? Get touched. What's up, Dustin? Good morning. Good morning. Good morning. Got it under my profile. Got to click on each account. Yeah, that's what I'm doing. On the fun next. My profile. Accounts. Futures. Yeah, I'm on the account, but there's nowhere where it says like you're doing your KYC or whatever. It says hello, blah, 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 blah. Your KYC can be found on your dashboard. But I've already done the KYC. I don't know. Sign your agreement. Whatever, I'll just put in the ticket. Good deal, good deal, good deal. Whatever. Maybe it's a sign from the universe that I shouldn't be trading it today. Well, when I had that issue with them, it's because the review process wasn't finished yet. That's probably what it is. And I think that they're just like way too backed up, probably. That's it. Yeah, so one of my accounts, one of my like no DLL accounts just went funded with them, so what are the NQ levels for today? So S&P, I'm looking at 59.19. 62 is a strong support. 59.42 is a strong resistance. Orange to yellow. Yellow in our world is always a really strong resistance. Orange is always a bounce point from whatever direction. So there's pressure from here to here, and then there's resistance from there. It doesn't mean I ever short off a yellow, but I'm always cautious when you get there because there's going to be a hesitation for upward movement with these yellow lines. Remember, throughout the day, any loss of the yellow line is typically a short opportunity. If it fails, some of our traders may short against it. I usually don't. As you see, there is always scalping potential. It's 21,537. See how the market hits this? This is one of our magic numbers, and this has been here for about a month. When you hit this number, there's always rejection, but I don't necessarily short off of it because of that. But some days, that is the rejection that sells off. But you can always see there is some kind of scripted mathematical volume-based thing going on here, and we teach a whole class on why that thing works. I'm looking at my overnight dynamics, which I don't know where those lines disappear to. Nasdaq level is 297. Oh, that's because it's right here. They're all buried together. What is this? What are you? Oh, you're that. Okay. Put you on the chart there. So Nasdaq is really far away from its pivots. 544 is it. Yeah, we've really got nothing to play with on Nasdaq today. We'll check all of this. So we'll go straight to liquidity maps once we get those things open up. Let me double check where these red lines coming from. Lidoc's going to be out of town for like a million days. What am I going to do with my time? when the cat's away, the mice will play. Elden Ring. So I'm excited about that. You're like, Matt, no, be a good boy. I'm being here like freaking, you know, I'm like, I can't wait to get to the DLC. Oh my God. Remember that? Yeah, no. Time for a party. I'm on this time every single day. First day back in a week. What's up, Aaron? Yeah, I haven't seen you in a while, man. Yeah, I found you on My Fun and Futures. What's up, man? It's curious what your strategy was. Kill it on there, by the way. Thank you, Sean. Watch at the market open. I'll give you a little information. We got 25 minutes on what I do, but watch at market open. It's a very cool process. You ever getting in pre-market trades? Sometimes I do. It just depends on if I get one of my strong pivots. And strong pivots are going to be this lower green band or this orange band here. So in our world, yellow is resistance. Blue is an acceleration to the upside. So let me give you guys, let me just draw on the screen really quick. Okay. Blue, they all do different things. So most of our stuff is gamma exposure, volume prediction. So all these pivots you see on my chart predict volume. Each one of these things predicts volume. Blue is an accelerant to the upside, okay? Yellow is a resistance off of it, okay? Orange is a bounce off of either direction. And green is the same way. Green is a pivot off of itself as well. So whatever direction you're approaching it from, it does this. And then these boxes here as well. One of the things that we teach, we have these little cheat sheets that we give out. Let me pop some of these up for y'all to see. It's really cool. So I might want to be some of the first traders that you've ever watched that actually have a legitimate mathematical exploit. They'll work. Some of the things they do work about 90% of the time. Here. Let me get like my little cheat sheet out here. Cheats out here. And somebody asked, like, how many times do I blow up a month? So in the in my futures account, my real futures account, I haven't blown up in I don't know how many years. It's not in recent memory I've ever blown up a live futures account. But in my prop accounts, everyone blows up. They're really hard to pass. Even the best traders out in the world blow up prop accounts all the time. Someone tells you they don't, they're lying through their teeth. But I don't blow up a lot. I've seen some traders that are on like account 4,000 with Apex. They always call each other out like, how many times have you blown up? How many times have you blown up? You know, they always kind of like hide their account numbers and let you see how many times they've blown up. For me, it's maybe like fewer. Like I said, it's fewer than 5. It's like 5 to 10 a month. Maybe it's not a lot. And I think I blow up the least of anybody on YouTube. But the prop accounts are that way. Sometimes you're just gonna do that. And of course, when I do all my trades, I never trade them all at one spot. So I've never once in the entire history of me doing prop accounts blown up all my accounts ever in a single day. Never once. I got the backs to prove that. But the reason is because I don't trade them all at the same time. I stagger my risk. And at most, one account or 2 accounts at most may bust on the worst day. Like the market falls and hits a pivot, I long it. Falls and hits another pivot, I long it. Falls and hits another pivot, I long it. And then it's just like one of those days where everything just breaks down. Yeah, you know, I can lose an account or maybe 2. But I've never lost all 5. And in general, I basically probably keep most of them alive. And the reason I do that, I split my risk up and not copy trade, is exactly for that reason. I'm going on the MFF show. Yeah, so Aaron, you haven't been here in a week. They offer me a permanent slot on MFF TV. I'm now the afternoon host at the lunch hour. And it's the highest rated segment of their show, actually. And when we went on, was the highest views their show ever had. And every day it's gotten bigger and bigger and bigger. So you guys have literally been probably the sole reason that the My Fun and Future stream has doubled in size and is bigger than Tradeify, is bigger than Tasty, bigger than Ninja, bigger than all of them. Thanks to this group, this community. We literally have, now I'm not saying it's solely me, they have amazing speakers and amazing roster throughout the day. But when we go on at lunchtime, when everyone else is kind of like dwindling, we show up and there's like 2,500 people, 2,000 people watching the show. It's incredible. So they definitely have you guys to thank for helping, you know, that channel get a lot more exposure and of course supporting them. I'm really happy for it. So I was excited to see our first day on the stream. You know, we were bigger than their biggest show, which is kind of cool. Total views. And then like 2 days ago, I think Friday, the show got like 15,000 views or something like that, which is pretty big. And that's like big. So really appreciate you guys. Trying to get funded with Tradeify is better to trade only the strongest pivot. Yeah, so if you're trying to get funded, it's really good to try to just trade your stronger pivots. Let me show you guys what the strong pivots are while we're chilling here. Get my little cheat sheets out here. And so like some of my Tradeify accounts, one of them has 50K, one of them has 40K profit. The other 3 have between like 0 and 10 or 0 and 15, something like that. And there's like a couple of them that I busted that I had to start over with. And so, you know, it just happens whenever you take a big risk and you're trying to push the accounts further. But I got to the point where, you know, 2 of my accounts are so far ahead that they can just trade them without having to worry about it. Never going to blow those things up. And the idea is just to have, you know, accounts with big buffers in them and never lose the account. And I have to try really hard to lose a 50K account or 50K profit in an account. Okay, so you guys see how blue is a pass through. Blue is always a long pivot. Pass through, blue up, blue up. Anytime you hit blue, you're longing it. Whether it bounces or hits it, I'm always longing blue. Yellow is not on here, but it's always a resistance pivot, as you see right here. Orange is always a pivot off of itself, there or there. Orange bounces 90% of the time under ideal conditions. I'll put 90 here. Blue bounces 80% of the time under ideal conditions. Zone to zone trades are 90%. These are our stronger setups. This guy right here is 92% under all conditions, and this one is 96% under all conditions. So I've got 6 pivots that are greater than 80% probable to happen. That's why I have a high win rate. I rock about 75% win rate in all my trading accounts. Now I show my stats every day. If you guys like to see it ever, just tell me, I'll throw it up. Inside of here, ideal conditions are you have the confluence in the direction of the trade that's required on the list if it has something there like confluence is this or this or this, and none of our signals and our alerts are red. If all the signals and the alerts are good, then these stats hold. If any of the confluence doesn't line up, then we call it like all condition. Under all conditions, this is roughly 70%. We just did a back test on this, and the bear market was 70%, and this one was 70%. These we don't have, and this was 70%, 73, 72, something like that. This is already all conditions. So at best case scenario, 90, at worst case scenario, 70. So under worst case scenario, these are actually the probabilities without all the full confluence. And this one, we don't know, but we still think it's about 80% because this is one of the strongest ones we have. So you could see there's a lot of really strong pivots that I have that I use in my strategy. So I'm going to talk about those in a minute. Yesterday's market, right out the door. Remember we talked about, let's put this off to the side. Blue is a pivot 80% of the time under ideal conditions. Yesterday were ideal conditions. Blue is a pivot. As you see, blue is a pivot. Zone to zone trade. When the ratio is greater than half, bear zone top is a long from here to here. Everyone see these two? Everyone on chat, tell me you see that. Y'all see those setups? Color coded for easy understanding. Y'all see that? Sorry about it. My head was in the way. Okay. Y'all see that? Okay. Zone to zone. Let's make it bigger. Bear zone, like light gray to dark gray. It's color coded. Light gray to dark gray. Y'all see that? How clean was that? Dark gray support as well to some pivot. Another thing is blue to the open, which was blue to the open, which is over there, or blue to wherever. Okay. This pivot, and this pivot, right? How strong they are. This one was 80%. This one was 90%. You see how clean it was? When I was trading at the open yesterday, I took some longs at the half gap, which is a less probable long. It's not on the strongest setup list, but it is a less probable long. And then I took a win out the door, and then I tried a long again, took a loss, and then waited. Long there. took a loss, got back in on the long, let it ride. In the accounts off the screen, I was adding here and adding here and adding here. So on the screen was the one I was battling the most with, but I spread my accounts out so I can actually hit all these pivots with different accounts. So the one on the stream, I think I like longed here, and then when it fell half gap, I longed again, took a big loss, and then I closed out. As it was falling, my other accounts, I started piling in at each one of the pivots. I think I longed most of my accounts down in here. And then we went up and longed like all the way. And I think I closed out at half gap at that point because the res was less than 0. But long story short, I trade each of my strong pivots and I split up my accounts. I don't trade them all at one pivot. I put a couple at this one, a couple at this one, just to make sure I'm not all my eggs are all in one basket. You know how the rule goes, right? So those that are asking about the strategy, this is what I do, the strongest bull setups. This is available in our Discord, and you'll just see every single day I kind of do the same thing. And how clean that pivot was. So this is in SPY, and then I'm watching futures to the left, and as soon as SPY hits its target, I have a converted level in futures I trade off of as well. QQQ, same noise, right? Yesterday was like the same thing. Oh, I was actually trading QQQ. Now I remember. This is where QQQ, I actually longed right there, and then it failed, and then I longed right there again. Same setup. So the pivot tried to work, lost from that weird selling that we had, and then once things got back to normal, then I longed again for that same pivot. And basically long for the rest of the day. Once we hit bull zone bottom, I built a long again, and then traded some of that long to the upside. Bull zone bottom, which is this dark gray bottom, is this one right here. Setups are pretty solid. Yeah, so those are your strongest pivots, fellows. Are the DD bands correct? Yeah, they were correct yesterday, but what I realized was that the table, it was focusing on the U contract rather than the M contract, and the M had fallen off the list. It was showing September's levels instead of the June ones today. What size is the MFF account? I can't tell you. I can't tell you because it's probably bigger than what most have. Don't want them to get upset. These are my calculated levels, yeah. Pizza for breakfast every day. Every day, dude. That's because of what we got. Is she an eye doctor or a nickname? She's actually an eye doctor. But it's also a nickname. Why'd I choose them over others? Rich, choosing who? What are you asking about? Do I have an account with them? Yeah, I have an account with My Funded Futures. I have a live account with them. So that's the pinnacle of prop trading firm, is that you get invited to go live. So anytime you're trading with a prop firm, you can do the eval stage and the funded stage and get payouts and all that. But when you go live, that's a real trading account. And very few people of your Simfluencer world get invited to live. You don't see a lot of people out there live in these accounts. Very, very, very few of like the YouTubers, very few of the Twitter folks. They're all sim payouts because they blow up thousands of times, bring in a ton of revenue, and they're actually not good traders. Somebody that is a good trader, when you get promoted to live, what it means is the firm wants you to trade with them, but you're too good and they don't want you taking their money. And they know that, and then they offer live to you so that you guys work together and you guys trade against Wall Street together, and they can get some of your profits with you. You only get invited to live if the firm thinks you're too good and they don't want to lose money to you. So it's rare that traders get invited to live. That's the ultimate goal that you want with the prop firm, is to be invited to live. Did I up green yesterday? No, I didn't up green yesterday. Not by the end of the day, no. However, why do you never show my off-screen entries and exits? Because I'm managing like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 accounts. Six funded next. 18 accounts. 6 fund. Well, 19 if you count my personal account. 6 funded next. 5 Tradeifys. 5 top steps. 1 ETF live account. 1 My Funded Futures live account. Matt's live account. So, and they're all in different platforms. So I've got like Top Step X. I've got Tradeify desktop here. We can open multiple DOMs. I've got Tradeify browser over here. I've got Rhythmic Trader over here. I've got, yep, it's like the stream can't, I've got like this much real estate right here to kind of show a DOM. That's it. And that's really kind of the thing. For like purposes of cleanliness, I don't have room or any way to show 17 different accounts. I've seen people try to do it and it looks horrible. How many screens? I've got 6 screens plus this little tablet screen that I can write on, but I don't use it anymore because it gets in the way. They're different DOMs, different platforms, different everything. And then I trade my options account on my phone. I trade my real life, my futures account on my phone. Well said, Matt. Or they ban you like Tyler? Yeah. So if you do really well, like prop firm, you guys know with the sim funded payouts, you're not getting paid real money from Wall Street. You're getting paid from the pockets of the casino. You're playing against the game and the casino pays you out if you win the game. If you start winning the game too much, they move you to live. It's like a ban from the game, which is totally fine because, you know, at that point, the casino's like, hey, why don't you come work for us? You're doing so good. And that's kind of what happens. And that's kind of neat. So your ultimate goal is to do that because your taxes are better. You know, you make more money, no profit split, fewer rules. These live accounts, I mean, there's practically no rules on them. My fund of futures has a little bit of rules, like daily loss limit and stuff. But it's like in the eval world, the prop firms are trying to squeeze you out. They've got rules designed to make you lose to increase their revenue. But in the funded world, they want you to win as much as they can. So they're out there while they're mitigating their risk. They're not like putting trailing drawdowns in the account to let you bust, right? They're like, let's make it easy for you to make money. So there we go. Yeah, it's a ton of screens. My drawing is suffered as a direct result. Yeah. DLL is tight. Are you talking about on my funded? Or on funded X? My funded's DLL is type. Oh yeah, I know. But the thing that I'm doing with that is I'm only trading my 90% setups and I'm only hitting it with one contract. And then what I don't normally do is add to a winner. But in this case, I add to a winner. Certain live programs, the DLL is pretty tight. Yeah. And that is kind of the thing that they do, but it's kind of fine because if you have bad luck go against you, you just get knocked out every single day and try again. So my trick is whenever I hit my target, normally I'd hit it with like my max pivot, right? And just hold through some drawdown because when DLLs are tight, you can't do that. So what I'll normally do is I'll hit it with like one contract enough to survive where my stop loss doesn't hit the DLL so I can have a second trade. And then when the trade confirms to be winning, when we break out of that first range, I'll usually add to it. And I don't normally add to winners, but this is how I scale a live account with the DLL. I enter a soft position, and then once it has enough fat, I use that fat to stage in such that, you know, and I move my stop up to break even on the first position, and then I let it ride. And that's a way to get around that, because if you hit it really hard at your pivot with like the max position, just sometimes accidental weird volatility like this can stop you out for the day. So I make sure that I can avoid volatility in that first possible overshoot. And then once it stabilizes, or maybe I get the first run, then I'll add one to the position there and let it ride. I did that yesterday with the my funded account. Worked out just fine. I normally don't add to my winners in any other circumstance of my day trading. I don't like adding to winners. I like adding to lower a cost basis and lower my risk, but I never usually add to winners unless I'm trying to purposefully scale an account. And my goal is with that one is to scale the account big enough that I can ask for better considerations on the DLL. If I get the account bigger, which does happen in live programs, it's negotiable. And once you start making a certain amount of money, you negotiate with them and you say, look, I want a bigger DLL. I want more contracts to trade or whatever. And usually if you're doing well, they'll honor that. So this being my first week live with my funded, I'm just trying to prove myself for a little bit and show them I know what I'm doing. I've got risk management. Then maybe I can ask for a bigger buffer on that. Yeah, can I draw the lines like I used to? Yeah, they're off the screen waiting. So today, guys, we've got 6 minutes till market opens. Let's review the news. Thank you for being on the stream. Don't forget to hit the like button, friends. Everybody smash that like button. What's the position size for top of the box pivot? There was a decent pivot in ES yesterday. Wasn't whether should have hit with normal, medium, or small. So you'll see on here that it'll tell you the only real bull zone bottom pivot that shows it is BSU, and it's always a normal pivot. Rule of thumb, if it's a 90% under ideal conditions, it's a normal pivot. If it is an 80%, it's a medium, and less than 80%, it's a small. Rule of thumb. So your normals are going to be like DD bands, zones, monthly hedge pressure. Your mediums to smalls are going to be like, open to close, like box, like redistribution zone trades or hedge pressure trades. And most of your shorts are going to be small as well. Okay. Let's see what's on the news today, guys. Double checking. We waited all day for Powell to say something interesting yesterday. He got on the microphone and spoke for like 8 minutes. It was a complete, like, nothing happened day. PMI was out, then all the news came out. The data came in just to be as expected. It wasn't a shock that things came in slightly better. Improving trade war conditions, and data is going to come out slightly better. Same for top of RDZ. Yeah, usually open trades are, well, you can see on the actual liquidity map. You can see that the diamond is open. These are box trades. So what we have, our black diamond here, is the same thing as a redistribution zone. 1A is a small off of the open. 1A is a small off the open. 1B is a medium off the open, right? So 2 is a normal off of monthly hedge. So you're not trading off of this. So normally the rule is if you're trading off of the open or redistribution zone 1A, it's pretty much small across the board. And that's why you only see me like when I chase that open trade or whatever, it's always just like one contract. It's nothing big. So your redistribution zone is typically a small, right? Because it's not seen as a strong pivot. It's believed to be, 50 to 60%, based on resilience. Give or take a little bit more. But yeah. Today, let's see what news we have coming out today. Always got to do the pre-market stuff. Today, we've got Fed, nothing. So this week, for the rest of the week, Wednesday, we've got the ADP numbers, which means Friday, we got the government numbers. So non-farm payroll is going to be a big day on Friday. Thursday, I think AVGO has earnings, so that's going to be big. They're a huge company, but other than that, there's not really much big activity planned for the earnings area. Like earnings are going to be kind of lighter this week. Kind of tapering off earnings season here. All right, so let's see. We got the opening play today. The upper green bands, we like to bound our trades in between these green bands. It's a really strong probability of bouncing there, staying between the green bands. 88% of days will stay between those green bands. One of our favorite setups is to bounce off of those bands. Floating in the middle, which is good. There's no real interrupts. There's no real craziness overnight. These are all pivots I'm about to line up as soon as the market opens. The green bands, 88% of days will close between these green bands. Above the band, no shorting. Below the band, no shorting. Inside of the band, pivot off the band. That's going to be fun. So for now, friends, don't forget to smash that like button. Everybody here, let's hit it. Get 500 likes. We're going to do ourselves a giveaway today. Giveaway every single day. We'll do take profit today. We give away 100 plus accounts per month. And this month, May, we almost doubled our activity in the prop firm world. I'm going to ask for twice as many. So maybe we can do 200 giveaways this month. So we did over 100 last month. We're going to see if we can do 200 this month. I'm going to hit all of them up this week with emails. Be like, look at how much you guys, we love you guys. So yeah, so the more you guys participate, the more you use our code, the more I go negotiate for giveaways. Most of your influencers are going to go out there and try to negotiate big fat salaries from these prop firms. Like, you see the ones that buy supercars every other day. They get paid like $100K a month salary just to promote on top of commissions. I don't go ask for that. I go ask for giveaway accounts instead. Somebody's like, hey, we'll offer you, $20K a month to talk about our brand. I'm like, can you just give me like 40 accounts to give away a month instead. So believe it or not, I don't need their money. I'd rather have a better stream and better brand and better giveaways for you guys than, you know, I mean, what am I going to do with this, with the second sports car? You know what I'm saying? I don't even care. So use the Rocket Scooter code everywhere you go, or use the code ROCKET if you're using Fund to Next, and I would really appreciate that. And we turn that into giveaway accounts for you guys. By the way, this week we're gonna do a giveaway for lifetime Rocket Scooter if you spend over $1,000 at the prop firm using our code. We do giveaways for lifetime for everybody that qualifies for that. All right, right out the door, we're gonna look at the opening setup. Resiliences are positive, that's good. Greater market, we've got the 3 indicators we do look at. We've got DD ratio, greater than half, likely so. And again, another up and run right out the door on the S&P. So we're going to see where that open is, and then I don't know where the half gap is, but I'll wait. In 1 minute, our data is going to come up and print. They're like maybe a flat-ish day today. 972, 36, about like only 4 points of difference here. It's going to be about 10 points lower on NASDAQ as well, probably. It's gonna be like right in there. Like all of them are stacking up. Okay. I hate days like this because it doesn't give you much of an actionable entry. The 60, 23, 20. Yeah, it's 41, 10 points. Yeah. All right. So there in the middle, wait for our liquidity maps to come through. I hate moves like this because you don't get time to react to it. S&P. Same as yesterday. Cool. So when you see setups like this, the question you have is, can I take the long from here out the door? And of course, it just burps straight up on whatever. But we do know that we have interaction with this box as a pivot. We have interaction there, and there is a pivot in case there's a dip. This might be hard to trade because there really is nothing to act on. QQQ is kind of moving up a little higher. So let's mark all of this. It's going to be kind of clustered because all my pivots are in the same spot. But we really don't need to like mark the open and close. It's such a flat open and close. I'm just going to put the half gap there. We all understand that all your pivots are basically here. Okay, so right in the middle, the setup with a 50% chance for the 50, 60% chance is if this white number is greater than 0, then we support right there on this first little dip. So basically here is support for the bigger run up. If this is another big run up bull day, if we start losing this open with any velocity, then the market's going to pull back really nasty. So let's see what happens. We're bouncing on that first pivot there, and SPY's probably the same setup. One could effectively take a potential long trade off of this first bounce. And I will see right at half gap in the box what we get. Resiliences are still pretty long and strong, but we're going to, let me see if I can't take maybe like one particular long at the half gap right here. Just like yesterday, pop and drop. Now, if I take a long, I'm going to do it in one account just to show you guys the setup. And then, so resiliences are still good. And just drop a little bit more. I'm watching S&P by proxy. Okay, just one contract, one account, not big. I don't want to take too much risk here. But this is it. And if we lose this and I take a huge loss, I'd be excited to lose money because these setups I'll hit with all of my accounts. So that's the way I'm doing it. One account, my belief in this trade is not much. Not much. I'm not too excited about this, but not much, okay? All right. So actually, I'll hit it with two of my accounts just from here. And if it goes up, then it goes up. If it falls and falls and falls, I've got really strong pivots down here to play with. So this is rock solid. This is rock solid. DD ratio greater than half. We call this the greater market. The greater market. This will help us determine if the market is bullish or bearish. Greater market, we have DD ratio greater than half. We have SPY above MHP. So this is daily with the stocks. Stocks are bullish. The S&P is gamma positive on its monthly options, which is fine. Which is good there. And then we have monthly maps, which is a 3-month forecast on the index. We're going to see if the index looks good here. And we should probably be all right. MHP is this orange line, by the way. And I hope I lose money on this trade. Hold on one second. I gotta It keeps logging me out of my freaking platform. Hold on. Hold on one second. I got to log in again. Sorry about this, guys. All right, let me reopen my platform here. Sorry about that, y'all. Okay. Super irritating. And I do hope I lose money on this trade. I'll be super excited about it because then I can get my better pivots. Stronger pivots I can hit with all my accounts. So this is my big account with 50K buffer. I should be fine. Monthly maps are good. The way you read monthly maps is if you're inside the gray and the bottom of the gray sloping down, it's bullish. That's all you need to know. So monthly maps are bullish. Everyone in chat, how many of these things need to be bullish for me to be a bull? Everyone in chat, let's hear it. How many of these need to be bullish for me to be a bull? Just one, and all three of them are bullish. You guys nailed it. Okay, so we're good with that. Things should be all right. And I hope, like I say, I hope we lose this first pivot. I hope we sell off because you know what happens? I've got rock solid pivots below this, and that's totally fine. So I'm throwing like a sacrificial dummy here. This account can lose 1,500 bucks. I don't even care. But if we land down in here, I'm going to hit it with all my accounts, and I'll be making a bigger trade, bigger risk, and making a whole lot more money here. So I've got like one particular setup for this half gap bounce with good res, which is good. Be careful watching because NASDAQ is deteriorating just a little bit. And I'll be watching very carefully. If I get like a crazy candle, I'll lose maybe $1,000 per account. I'm long in just 2 accounts. But boy, we see these liquidity pockets under here, don't we? And we get super excited. All of the lights are green, so we're no irrational signals. And then everything else across the board is nice and clean and bullish. The exception is keep your eye on resilience. Losing this is bad. This is really bad because remember, I told you guys pre-market that this yellow is a resistance pivot. So losing it is bad, okay? Which is totally fine. I'm still going to take the bull side, but I'm going to take a very small position by just trading in 2 of my accounts and not much else. Okay. My serious accounts, like my funded futures, my live account, like my funded next that I want to babysit. My babysit accounts, I'll trade down in here and down in here. This is the ideal long setup, and so is this one. If the SPY happens to fall, S&P falls 20 points from here, oh, I'll be such a happy camper to lose $1,000 in this account. I'll make 20 on the way back up. Okay, so now you see how I think as a trader. I'm going to put a couple of dollars at it just in case we gap and go. Do y'all see what I'm saying, right? Just put a couple dollars at it. See if it gaps and goes. And then after that, I'll buy at the dip. All right, everybody. Just because I want to see 500 likes and only about 1 out of 4 of you guys hit the like button, I'm going to ask you one question. One question at all.
Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Hit the like button. Hit the like button.
Everybody hit the like. We're doing a giveaway in about hour and a half. Get those likes to 500. Hey, from Perth, Australia. What's up, man? The upper target on this is really great because all we have is we have red lines, we have DD bands, we have a ton to play with. So I'm excited to see what happens here. If this is big crash day, big sell-off day, I couldn't be more excited. You have no idea. Hold on one second. Turn my laptop on here.
Hit the like button. Rocket scooter. Yeah, yeah, yeah. Rocket scooter. Yeah, yeah, yeah. Rocket scooter.
Just turning on my laptop.
Hit the like button.
I just have one long contract. That's it. And I told you this is a very low probability setup. I want this to lose money. So I'm taking it along just in case it burps up, but I really don't want it to make a lot of money. And if it starts falling, then I've got bull zone, bottom, bear zone, top to play with. So it's just enough that I can ward off any possible initial volatility on the opening move. QQQ has the closest run. This is about 120 points lower on the bounce. So S&P is actually, wait. No, S&P is actually closer. S&P is like going to be the one that pivots first. Okay, so let's mark up these levels here for y'all. Oops. About 20 points lower in the here puts a bounce point close to about 23 on the S&P, and this is actually the strong pivot for the day. I'll give you guys some notes here really quick. What these actual pivots do. Keep some notes up here. Okay. These guys on here, right here. Show you guys some what we're looking at. So it's going to be a 90%er on this one. Oh, taking off. Good deal. So if I make money, I make a little bit of money. If I take a dip, then I can actually hit it harder with the lower spot. Put the half gap here. You guys just like when I put the notes on here, right? Y'all like the notes. Y'all are a big fan of it. Let's roll it, baby. Let's go. Let's go. Taking the long. Res is good. No reason to be afraid of this. But I didn't take it in any of my accounts, like bigger accounts or anything like that, like my live funded or anything like that. I just took it in 2 Tradeify accounts. Open back up to here. Where does it go? There is no bound to this. It can go all the way straight up to the top, just like yesterday. And so I only just spread my risk out just a little tiny bit. Let's take it. I mean, it's money, right? Let's break out to the highs. Let's go, baby. Ooh. Ah, I love it. I love it. So strong. Love the notes. Okay, good. Let's do the same notes on NASDAQ. So we have this over here. Let's roll it up. Oh, guys, throw some rockets in chat. Let's hear it. Let's hear some rockets. Let's go. You guys know the drill. Now, again, I'm not overly celebrating too early. I wish this loses money, but we'll see. I kind of would like for this to just sell off. I'd love to get a strong pivot that I can hit all my accounts with. You guys know that would be pretty lovely. That would be super great. All my little pre-made notes here for you guys. I know y'all like seeing them. Makes it easy for y'all to follow along, I guess. Drawing tool here. Let's just put everything on the screen. All right, there you go, there you go, there you go. Put this all here. That's perfect. Let's load this up. Today's chart. Like I said, again, I'm not overly celebrating. I really would like for this to just die for a little bit. That'd be kind of fun. I thought I had MHP node over here. Oh, there it is. Okay. You can use MHP as like way down here. So we will put them kind of like by each other. think this is right there. Yep. And yep. Just put this half gap like right there. And settings, res is greater than 0, so it's support. I want to automate this to draw like these notes on the screen. That'd be kind of nice. Once we get our backtesting thing built, the notes will be on the, or the probabilities will be on the screen just like this. So this is my new vision of what I'm making for Rocket Scooter. If you guys are just tuning in, by the way, I built this trading platform that you actually see on your screen. We actually made this platform. So I'm building more stuff into it to automate a lot of this stuff. Like templates. Yeah. That'd be kind of cool, right? And your bull zone bottom on QQQ is roughly off of the open. 100 points lower than the open, which is roughly equal to 444. Bull zone bottom. Pretty solid for the move. I'm liking what I see. 634 is a run length red line. So this is our first resistance here. The R&R on this trade is pretty good. From here, 544 to 634 is 90 point, 40 point stop. 94 trade. Or a 2.25 to 1. So not a bad R to R on this one. Who here, it's your first time here and you found us on the My Fun of Future show? You guys, first time tuning in the morning. Not gonna lie, we have a really solid community here. I like to say they're probably one of the only YouTubers that has a legitimate edge in trading that I show on stream every day. I have a probabilistic approach that works roughly 80-90% of the time under ideal conditions. So I wait for my edge to set up. I split my risk up and hit my targets whenever they matter. And you guys can witness and learn from that. And it's free. Watch on YouTube. Second time tuning in. If you tuned in yesterday was a pretty gnarly day. A lot of people, myself included, got shaken up on that opening move and then crawled back at the end of the day. And a lot of times bull market's going to be like that. It's kind of sucks. Hello there. I'm new here. Ice Wild. My favorite new member. First time here. Why I took long. Always take long. 634 impact line. What have is hold on, wait. The middle check that that's the right number here. Oh yeah, 634 is off of Thursday's move to the downside. So that's my first pivot target to take out of this trade. 634. I'm going to send a message to Fund It Next and figure out. I messaged my contact over there, but I'm going to go through customer support just while I can. Well, where is my KYC? Let's go. $1,000 on the board. Ding, 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 ding. Just in one contract, too. I didn't have to do much. And I like to take that $1,000. And right where we're tying at the high here, I have really nothing else to go by. Let me pocket that. Open, you know, essentially pop, test the high. It could keep going. I'm probably robbing myself early, but I just don't like, I don't want to sit in a trade all day. I'd like to see, I really would love more than anything to see this thing just kind of like fall back and give me some better pivots. Today, we don't really have much coming out in the news as far as, I think, JOLTS in 11 minutes. Oh shit. Yeah, wait, the JOLTS. How'd I overlook that? JOLTS is huge. Okay, so yeah, JOLTS will be coming out in a little bit. Let me just pocket before the news. That's good. That's a quick $2,000 I made. I did that only in 2 accounts. Let me go through customer service really quick and find it next. What's up, Rajesh? Welcome to the stream. Welcome to your Life is Rocket Scooter Cadet. Appreciate the support of the channel, my friend. We all know the drill. Anytime you make a trade here, anytime you make a trade, the rule is you put rockets in chat. Anytime you make a win, anytime you make a loss, you don't have to do anything. I don't care. Put blow ups. I don't care. But if you win a trade or you see me win a trade, rockets are always how we talk about that here in the stream. On the rockets in chat if you're making trades. Gold shorts printed, bro. Nice, nice, nice. You made a trade, open. And why did I close at the top pivot? Just because there's really no reason to close. Just that kind of move bumped up, fell to support. I took my trade. I can get the full 2.25 to 1 all the way up, but jolts are coming out. I'd like to see the jolts jolt the market around. I got a 523 to 580. I got about 6 points with the 40 risk I was taking. Not really too bad. 40 points risk on Nasdaq is about $800 a contract. And I pocketed roughly a little bit over 1,000 probably with that. And that's not bad, right? So slightly better than 1-to-1, but you know what I want to see today? I don't want $2,000. That sounds boring. I want a 20K a day. I would love to see the market fall to one of these 90% pivots where I can play in all my accounts. Ooh, so good. I'm going through this customer support right now. Find out. Where is my know your customer? And I've already gone through the KYC process with FundedX. I'm already funded with them. My profile section of your account. Verification center. Okay. The profile. There. Verification. Your verification's been completed. Notifications. Yeah, I've already done the KYC. I've already passed all of that. I already did that once. But I have not received my notice, my agreement to sign. To turn this into a funded account. We've got 7 minutes till JOLTS come out. JOLTS are going to move the market a little tiny bit. JOLTS are going to help you understand the health of the job market. Let's talk about that while we're waiting. I'll teach you guys just a little tiny bit. JOLTS are one of the most important numbers that you probably don't think is important. This is a logistical thing in the labor market. Powell always talks about, we're going to cut rates except for, we look at our 4 key metrics, blah, blah, blah. We look at the health of the labor market. We look at prices and inflation. We look at, strength in the bond market, blah, blah, blah. Okay, right? So this is kind of the stuff that really matters at that one point of the health of the labor market. The JOLTS is one strong piece of the puzzle. Did you know you can predict the Fed if you can read the JOLTS? Did you know that? You ready? JOLTS are a U.S. Bureau of Labor and Statistics data point. It's coming out in 6 minutes. What it does, I'm gonna give you guys the least boring explanation of this. I like to explain stuff and teach you guys, but I hate economics, dude. I hate this shit. It's so boring. So let's get through it quick, right? JOLTS is basically like this. There's a job. A company has a job, right, that they need to fill. Let's just put the letter J here. I usually don't like to trade into events. This isn't going to be as big as it usually is because inflation is Lots of sense in the labor market, but it's still gonna be a deal. Job. Company has job A. B, a company has a recruiter calling people trying to fill in that job. B. C, there is an unemployed person or employed person willing to take that job. Means there's somebody available to work. And then they can start within a 30-day window. Both these guys can start and these guys can fill the job in a 30-day window. It basically means an unlubricated process. If there's a job opening but nobody's actively recruiting for it, it doesn't count. This is pure 100% supply and demand of the job market. It's 100%. That's why all these little restrictions are there for the JOLTS. There's no reason that job shouldn't be filled. This worker needs a job. This job needs a worker. And bam, peanut butter and jelly make a sandwich, right? So here in the middle, unemployed, unemployed, doesn't matter. There's somebody willing to take the job and there's somebody trying to get the job filled, and it can get filled pretty quick. There is no bottleneck in the way of this job receiving an employee, other than the pure supply and demand of this company needing to fill jobs and this worker needing to take that job. There's many reasons this worker wouldn't take this job. Wages suck, benefits suck, wages elsewhere are better, or that this person or that this company no longer likes that employee. Hiring restrictions too strict, whatever, right? This is pure supply and demand in the labor market. The JOLTS are the number of J's that exist in the world in these conditions. When the JOLTS go up, it could be a good thing, but it also can be a bad thing. This is the one thing you have to note. We'll take a look at the trend lately. Since January 2022, the JOLTS have been coming down. Fewer and fewer job openings. Is that bad for the economy? Well, think about it like this, right? In COVID, you had 5 accountants and you laid them all off. Now you have 5 J's, right? Ready to fill. You need jobs, you need people to fill. And now your JOLTS went way up because you laid everybody off, right? And that's kind of what happened after COVID. And JOLTS are coming down because you just filled up those positions, and JOLTS are coming down because you basically restaffed back into your company. Now, the way that JOLTS can go up again is if the company creates 2 new accounting positions. We're growing so fast, we need to make 3 new jobs. Cool. So when JOLTS go up, it could mean that they created jobs. But when JOLTS go up, it also can mean they fired the people in those jobs, right? So how do you know which it is? And the other data point that gives you that answer is you go on Thursday mornings when they come out with those unemployment reports. You get your continuing jobless claims, your initial jobless claims come out every Thursday morning, once a week. JOLTS is once a month. This is going to tell you if people are just getting laid off or not. If the JOLTS are going up because people are getting fired, well, usually when you get fired for non-performance related reasons, you're going to go file for unemployment, like while you're literally sitting in your car after you text your mom and say, I got fired from my job. This sucks. Well, son, file for unemployment. You get free money from the government. Okay. So if the JOLTS are going up and initial jobless claims are going up, then you know people got fired. You piece the two together and you know people are getting fired. That's not a strong labor market, and Powell and the Fed don't like that. If the JOLTS are going down and unemployment filings are going up, that's really bad. Companies are laying people off and closing the job out. The JOLTS are going down means we had 5 accountants, but we're not recruiting for them anymore. We fired them. We're closing the position down because we're downsizing. So that's bad. So you look for the relationship between jobless claims, initial jobless claims, continuing jobless claims, and the JOLTS. Put the 2 and 2 together, you get a perfect picture of the health of the labor market. Everybody follow that? I try to explain it like in 1 minute or less, easiest way to do it. Now, in the last, I don't know how many years since COVID, 5 years almost, you see the continuing initial jobless claims aren't really burping up. We've had a really rock solid labor market. Less than 250 is pretty normal in a bull market. We've seen that for a long time. There's not a lot of big waves of layoffs. We haven't seen much layoffs. The economy's been growing nice and clean. So not really worried about anything labor market wise. And so when the JOLTS go up and down as well, you could go look at the second data point, which is the continuing jobless claims, people that have been unemployed for a while. Initial is like people that just went and filed this week. Continuing jobless claim is like you still can't get your job back. And this will be something that's continuously growing higher and higher and higher if if the recessionary type world is still progressing, like JOLTS are going down and the initials went up and then the continuing slowly grow. This is your total unemployed labor pool that are filing for unemployment. Now remember, just because you don't have a job, you don't show up in these data points. This is jobless claims. To apply for unemployment insurance, or to apply for unemployment, your company had to have unemployment insurance, A. B, you had to be let go for non-performance related reasons. Like if you're in there, like, you know, if you get caught like peeing in the coffee pot or something, you know, they're going to fire you for something like that. You won't qualify for unemployment at that time. You only qualify for unemployment if you get laid off for non-performance related reasons like downsizing stuff. JOLTS look like they just came out. Market's bouncing around a little tiny bit off of that number. Let's read it. Don't pee in the coffee pot. Then you'll go to prison for that. But you know what I mean. Let's take a look. All right. What's the data say? Let's hit financial juice. Let's see what the little numbers came out here. Okay. I'm not getting the report here. And that's actually 634 impact red line or run like the red line on that, or no, sorry, impact line off of Thursday's sell-off. That was my upper target for that full breadth of that trade here. So we are moving like the data came out, but I don't see the data. Why factory orders down? Why is my data not updating? Financial juice isn't picking it up. What's going on here? Oh, there it is. Okay. Factory orders are down. JOLTS are up. Okay. So like, okay, in this particular sense, what is going on with my browser here? Like nothing's opening up. If the JOLTS are going up, we'll have to see on Thursday, is there unemployment? Like, are people getting laid off? And that's where you would say, aha, the job market's weakening. The job market's weakening. The problem becomes that the Fed may have to step in to preserve the labor market. The stock market's collapsing and crashing out because we're tightening too much or we're not acting fast enough. What happens is in a high inflation period with high unemployment creates something called stagflation. The Fed needs to fight that off at all costs. Stagflation creates a Great Depression during a recession that you can't recover from. Unemployed people and the high cost of goods, you can't even beg for money for a loaf of bread anymore. So that becomes bad. So when the market moves too quick and inflation is too high, Fed won't cut rates. When the labor market is threatened because the stock market's selling off because the Fed's over tightening, they tend to un-over tighten. And likelihood of cutting rates will actually go up. The labor market's looking bad. So the Fed has the desire to preserve, inflation, right? To keep inflation low. And inflation will remain low over a long period of time during periods of stagflation. So threats to the labor market can actually force the hand of Jay Powell and the rest of the guys to cut rates. This is why this is important. I know you guys just went through a really boring ass economic lesson. I think I only lost maybe like 2 people in that, but I try to explain it the most, informative way possible. This was the full breadth of that trade, 634. I was stopped before JOLTS and closed here, but that is the full length of the trade. I would be not long anymore from there. I'd let the market pull back and relax, but there really is no pivot to trade from here. But great trading today. Nice job. Nice job. So it's kind of neat to see that, and where did I learn all this from, right? Nobody ever taught me this. I basically went to investing.com, for the last 15 years, and I just read the little blurbs off to the side. I actually taught myself economics by reading these little paragraphs. Like, I don't need a degree in this. The paragraph tells you everything you need to know. Sometimes you get a little more information by reading further or Googling this stuff or Wikipedia or Investopedia this, but these relationships are basically logic. It doesn't really require a lot of information. You just got to kind of piece it together. Supply and demand, availability versus desire to take that thing or buy that thing or whatever, right? In this case, it's the supply and demand labor market. So JOLTS actually went up a little bit, right? So, a couple 100,000. What does that mean? Well, either A, that many people just got fired, or B, that many jobs just got created. So which one is it? And on Thursday, we'll have a better idea which one that is. If the JOLTS went up by 200,000 jobs, that 1,000 or million? Sometimes M means 1,000. Sometimes N means a million. I think it's a million probably. 200,000 up. If we go here and we don't see a 200,000 change, then we know the jobs are created, which is good for the economy. Right? All right, y'all. Good deal. Pretty solid day. Ran right up to pivots. SPY's pretty clean and flat-ish. NVIDIA ripping is the reason why the NASDAQ is ripping. But, you know, I'll take my $2,000 and be happy about that. I can't complain. No fading or shorting this, but, you know, this is a great pivot to long to. I don't hate what I see today. This could be another one of those days that just rips up higher and higher and higher. Nice and clean and easy run. Enter the giveaway. Oh, you got to be here whenever we get 500 likes. Sorry, you guys. So what I'm going to do today, because we didn't get 500 likes, is I'm actually going to do one account giveaway instead of 3. So I gave you guys a chance to click one button to enter, but I guess you guys didn't want free accounts bad enough. Sorry about that. We'll just do one. But wait, let me count to 10. If I see 500 likes in 10 seconds, I might change my mind. I might change my mind. Because, boy, I think that was the requirement when you guys joined the stream. I love you guys. I love y'all so much. It doesn't count if you click it 500 times, Simon. I wish it did. You guys see me over here, I'd be like, clicking it a million times. Okay, so illiquidity pivot, 6134 is the first bounce pivot on NASDAQ. Let's see what the S&P is. Now, NASDAQ hits its levels, see if S&P has anything nearby. Let me do that impact line calc really quick, because I don't think I did it. This is off of this particular move here. You guys know the drill. Let me run it. Oops, did I delete that? No, that's from the other day. Okay, so we need this one right here, right? Those of you that come to the boot camp will know exactly what I'm about to do, and I don't know if I'm going to have the ability to see this on a tick chart, because I only get 5 days. It might be too far away. Let's double check. About to do a really quick calculation for an upward pivot target on the S&P's move. Yeah, let's go back to Thursday. Which day? Thursday. There we go. This day. All right. You guys know the drill. Oh, yeah. Oh, yeah. That's the one. Okay. That's super quick, super simple. This is a really cool trick I teach in the boot camp. We're going to find that pivot for the day, and then we're going to find this pivot for the day. And I think we already tapped that one, the 42. We certainly did. Yes, sir. So S&P is 95. That's really far away. Boy, do I feel happy just like sitting back on this. NVIDIA's first pullback test here. Anybody on NASDAQ, Rockets, if y'all made that trade, did anybody do any long from here to NASDAQ up to red line? Did you guys run that 2.25 to 1 setup? That was really, really solid. Right? POS jolt selling pressure. Yeah, that's pretty much what happened, right? I mean, jolts going up could be layoffs, I mean, typically, or job creation. So we have to see the job data on Thursday to see what the difference is between the two. God, I love getting out of the way before the news happens. This is like, oh, and our red lines are so good. We teach you guys this in the boot camp. Started the stream. I drew that whole thing. I drew that pivot, and I got out before the jolts. But man, I would have just longed there anyways and got out of the way. What is going on? There's got to be some. This is not high volume selling, so this is just a. This is just the NASDAQ repositioning. It's moved on NVIDIA only, but I think some other stocks might be selling off. It's not high volume selling, so it's not an event. There's not a reason for this to happen. It's just reconnecting with the rest of the index. Everything else is looking good, though. The question is, do I want to take a long there again? Resilience is decent. Do I want to take a long? Maybe. Let me do it one more time. Let's take a long. Why not? Which account do I long in? Maybe I'll just, I don't, this one's up 1,000. So let me try another account. Let me play with a different DOM. I'll just make 1,000 on that one. I'm good. Still supporting the open here. S&P still supporting the open here. Losing that yellow line would be pretty bad. Why don't we trade the S&P today? How about that? Just for funsies. Let's do one contract on S&P. This is a fresh account. I haven't touched this one yet today. That's a really shit entry for me, though. I could have done so much better here. I want to see these white levels above 0. That's all I care to see. Again, I'm not touching this with any of my important accounts yet. I want my important accounts to be very close to these bull zone bottoms. And again, I don't know why we're selling, but I think we're just connecting with the rest of the market. Everything looks kind of okay. It looks really bad. I'll tap it with S&P just to do something like a little like less risky. S&P hasn't moved that much, but Nasdaq has. We'll see if the rest of the market's looking decent today. Let me run up the sector tracker here really quick. See, let's just take an idea of like what's going on. I'm gonna watch all the indices sectors all at once. Oh, heavy rotation. This is I hate days like this. It's a picky day. Not just rotation, but like it's when people are extra picky, they're selling one thing and getting the other. With tech being heavy, the market's not going to crash. That's number one. Rule number one. Everything else looking good is good. So tech is probably going to hold us from here. I'm going to take a second long entry just to let it ride up higher. S&P's got that level like all the way up at like 95. So I think I'm pretty good. I'll just play on like one contract there. You know, nothing crazy. And see if it just rides for the rest of the day. I'm okay with that. Looking solid. And if it falls, I love, again, like earlier, I love more than anything. See, Apple was selling off of low volume. So this is a really low volume day. I would love more than anything to take a loss right now on this account. Oh, I hate jumping in, just trickling up because I hate being in a position where while I'm waiting for it to go higher and higher and higher and higher and Donald Trump just tweets something. This is my least favorite thing. I like to see the market move quick so I can get my trades quick and get out. My stop on this will just be below the lows of this. So pretty simple. If we lose this yellow line here, down inside of here, I'll just stop out if we break lower lows. So the R&R is limited to an S&P like this 95 level. Is this a big run day? Is this a big sell day that returns? If it's a sell day that returns, I'd love that more than anything because that's going to be big ups for me today. 100%. We'll see if I get something good on that. Can't complain. Can't complain. All right, so just parking one contract there on S&P. I'll let it ride for this one. This is a $2,000 profit if it goes all the way up to here with about a $500 loss. So this is pretty nice. This is a 4-to-1 setup now. If I go all the way up to the red line at 95, 4-to-1. We had a 2.25 to 1 and a 4-to-1 today. Things are good. Resilience is good. Data's good. Market's good. I don't know what that selling was from. I looked. There's no news. I grabbed the long. Let's let it ride. I'm going to take a nap. Let's see how well I do today. I'm loving it. Open a new account. Which one do you recommend? A new account with who? What's your style of trading? They say go to the verification center and send a screenshot. Oh, okay. It's like no account selected. Oh my word. Okay. Do I still have my puts? Yeah, I do, but they're probably gonna expire worthless. the goal with this one was just to put baby taps on the market in case there was a bad news event over the last 3 weeks. I just put 20K with nothing big. Just in case the market were to crash out. You know, you could 5x or 10x on a hedge. Well, I've been longing the market every day in my prop firms. Longing. In case there was a day that the trade war fell apart, would have paid out. Does that make sense? Why I had puts on the market? I wasn't bearish. It's strictly a hedge. Imagine I'm longing like really hard and I'm making all this money one day, and then, you know, we get a news event that says the trade war is falling apart. Fuck China, 3,000% tariffs, and the market just crashes under my feet. And I blow up all my Tradeify accounts, and I blow up everything that I was long in. And then what happens, right? My 20K puts were made 200K, and then all of a sudden I'm fine. The cost of the prop accounts, practically nothing. You guys think about it like this. Let me tell you how I make millions of fucking dollars a year, sometimes a month. You ready for this? You guys ready for this? Okay. I long the stock market in prop accounts, which cost me practically nothing. I long in props, okay? It cost me $100 to $500 an account. So I'm sitting here on maybe like $3,000 or $4,000 of investment, okay? Let's just round up and make it a solid 10. I don't think I'm spending $10,000 on this, but I spent $10,000 or something on props. Easy as that. The props make payout, okay? I collect money. Some of that money just dumps into my regular trading account. Some of that money dumps into my options account. And then trading account, options account. Some of this money just reinvests back into more prop accounts in case they blow up, okay? Simple as that. A self-sustaining machine. I make more money from props than I put in, so that's good. It is a money printing machine for me. At this point, I put money into the options account and I long my props and long my props and long my props. And if I blow out on a news event and I lose a couple of $1,000, it doesn't matter because I made hundreds of thousands on that hedge. Same thing when the market was crashing out and crashing out and crashing out during the trade war. I was shorting and playing long and short on the way down. But on April 10th, I spent 50K on options and then made 50K when it burped back up. I'm always doing that swing hedge on the side with money, with free money I've made from my money printing machine. It's just money from this whole machine that cost me very little to get, just me trading well. But I'm like, yeah, when I say 20K, no big deal, it's not even my money. I've lost zero money from my net worth to do this. It's all coming from prop accounts. And it's a self-sustaining machine when you can do well enough to make it that way. And the prop payouts go into these hedges. If I'm longing the market and longing the market, and the market crashes and I lose the props, and I make money in the options, re-up the props. It's a never-ending money printing machine because the prop risk is so low and the cost is so low. You just buy, 2 weeks out, 3 weeks out of the money puts, put like 10G on it. You'll 10x your money if the market crashes, and then long the market every day. It's a money printing machine. Now the insurance is fairly expensive. You know, I'm spending 10, 20K a month on insurance, but you know what? I can't remember the last month I've had a net losing trading month. Even in bear market. So, yeah, once you tap that line, it's gone. Like, when you add everything up, I haven't had a losing trading month in I don't know how long. I can't even remember a losing trading month, to be honest. When you consider everything added up, properly hedging the market. Now, right now, I don't normally do the put strategy all the time, only in times when there's pending lightning strikes. Like, the market can just, like, out of the blue, right? And then Trump does something. And then from there, right, some shit can happen. Okay, that's when I want to be in that specific environment where I want to be like, okay, right? Not always I'm going to go out there and be putting 10, 20K in the market to waste if the insurance doesn't pay out. I don't normally need to insure the market. When President Biden was in office, oh my God, no offense if you guys like Biden, he's the world's weakest leader, the weakest leader we've ever seen. And I'm not saying because I hate Biden. He was just weak. He literally did nothing to make the stock market move. Absolutely. Does not bully people, does not push people around, does not make policies that make the stock market move. We didn't even know he was actually there half the time. Trump, however, stronger, pressing, and more aggressive. Trump moves the market around a lot. I didn't go out there and hedge my longs in the Biden market. You didn't need to, right? Know the environment that you're in and trade with it. Trump is like Zeus, man. He's fucking hovering in the clouds, holding lightning bolts, and he's ready to throw them down like every moment in time. So it's worth it to me to drop 10K or 20K every month or so to make sure I'm like, okay, just in case the market crashes, boom, I refill the pot, and that pot pays for the props, and the props fill the pot, etc. I don't have to really risk anything, and it's kind of nice, right? You're late. What did you miss? Hopefully you didn't miss your flight. I hope you don't. Hopefully you didn't miss your flight. Hold on. Hold on. I'm talking to the fun next people. So if you guys see what I'm saying, in the Biden era, I really didn't have to do much hedging. The market just ebbed and flowed much better. But with pending things like this, it's worth it to me to put insurance so that I can keep fueling, my prop. And the minute the market collapses, if the trade war falls apart, I'm ready to go. It's car insurance on your car, the same thing. There's trading insurance. Yeah, there's trading insurance. It's called put options. Put options are trading insurance. Same thing. You pay a monthly premium to Geico, save a little bit of money on your car insurance, and then if you wreck your car, you get the payout. Pay a little bit of premium into puts. If the stock market wrecks, you get a payout. You know what I'm saying? So in environments where it's necessary, where you know that news can come out of the way pretty quick, it's usually a part of your environment. Now, again, I'm not making as much in the Trump era as I did in the Biden era. Oh boy, that was such easy trading. I unhedged longs. I mean, I would just rake in the dough. Here, it's like the trade war stuff kind of makes it harder, but I'm not losing anything. I'm making money even the worst months. And the idea just becomes the volatility can be hedged. Now, again, you can hedge it a million different ways. I'm not that smart at options. I probably do it probably the worst way possible. But I just buy, out of the money puts at key support levels, just in case the market falls to test them on a really bad sell-off day. I'm totally covered. And then you basically pay insurance on a daily basis. Every day you hold that option, you're paying the premium loss, which is basically theta is the amount of you're charged per moment to hold an option. So how when you pay your car insurance, it's like a monthly payment of, I don't know how many hundreds of dollars you pay. When you hold a put option, it's a per moment payment of theta. So theta accumulates premium loss in real time. Theta is your meter that's running. So for every moment you're holding that option, you're charged a little bit of money. You can hold it as long as you want. Do I think we get a recession next year? Absolutely not. No, there is zero chance we get a recession in the next decade. This is where we're going. We've just left a recession and we left a market crash, which wiped the market liquidity. There is no bubble to pop. The market isn't leveraged up enough to pop and crash. This is the thing that I want people to understand. The reason markets collapse is because of overexposure. People get too heavy, too leveraged, too much into everything, and then the market pops. COVID caused that bubble to pop. There's just a big, strong bull bubble. All that leverage got wiped. Once that happens, everyone starts over from scratch, and it's only been 4 years, or 5 years, and we've already had a recession in between there and here, which is 2 negative GDP quarter-over-quarter growth months, right? So when you have that recession, which we did have, the market already hit its slowdown, and it was mild because the economic conditions were actually that bad. It was triggered by quantitative tightening in the Fed, rate hikes in the Fed, and high inflation. just caused a small baby recession post-COVID. But the bubble wasn't even really that inflated to pop. The market and everything else needs to be at a place to inflate and overinflate and then pop and crash, cause a recession. We're nowhere close to it. All the economic data is good. GDP is good. Job market's good. JOLTS went up. This could be job creation. We don't know. But basically, there's zero chance we have a recession in a year that ends in 2020 something. Practically zero. It would have to have some kind of fallout from the tariffs. The tariffs can cause economic slowdown and can push us into a recession if it falls apart. Other than that, unless we 10%, 15% tariffs, not enough for recession. Just like CPI of 5 and 6 wasn't enough for a big recession either. It was a slight, tiny recession, but none of us lost our jobs in 2022. I don't know if you guys did or not. Maybe some of y'all did, but it wasn't like it wasn't like a 2010, 2009, right? 100 and something % tariffs on China could cause an effect that can lead to a recession, but 3 to 5 years out from now. I think people think that the tariffs finally hitting, and people suffering, makes the market or things just immediately fall. As a business owner, you'll understand why that's not true. As a business owner, if times get tough, Rocket Scooter went through a recession, by the way, times get tough, prices go up, right? For us, what do? Well, you don't just die because prices get higher. What happens is you have money saved up. There's your zero and there's your savings. And hopefully in a good, business, your savings is growing. But in downturn, somehow you're spending more than you're bringing in and then savings come down. But you have savings, so it's not like you just go to zero where you're in trouble and laying off people just yet. Normally, you get into a place where you're like, holy shit, we have less money that's coming in and we're below what we need to survive. Okay, then the next thing you do at that point is you have the good credit you've accumulated over the years and then you take out a loan. You take out a loan to buffer that loss, and then you're back down to trickling, and now you're paying off the loan. And then once it gets there, you take out another loan, and then once it gets there, then you exhaust all your abilities to raise money for your company, and then you lay off. Right there. Company owners, can I get an amen? You guys understand? You guys have a savings. But you understand the process, right? You don't just, oh God, my prices went up. Okay, sorry guys, you're fired, and you're fired. Times is tough. Don't worry, you'll bounce back. Remember in Always Sunny when Charlie was like, yo, can I sleep in the bar at least? Sorry, Charlie, it's a recession. What am I gonna do, guys? You'll bounce back. You always do, right? You've never had to take the loan? Right, so some people never have to take the loan. But the point that I'm driving home is that you have time before you take drastic action. It's very costly to lay off employees because it's very costly to replace them when you need people back. If you lay off somebody and bring them back, or bring out somebody, you have to train them, they have to ramp up, their productivity's low, things like that. It's very expensive to fire somebody. It really is. It's expensive to fire them and bring them back. So this is your last resort. So to have that happen on massive scales, like with the Apples and the Googles and the big companies, they need to suffer for a while and burn through their cash reserves and burn through their ability to borrow money and things like that. And then you hit the recession once people get laid off because productivity is down, because demand is down, because people are getting laid off, and it creates a cycle where more people are laid off, less money is in circulation, less things are bought, more people get fired, et cetera, et cetera, et cetera. And then you're like, okay, now we're in like this recession, right? But it would come years after we feel the effects and companies can no longer survive. 10, 15% to some companies' bottom lines. Yeah, like, mom and pop shop might be struggling with that. Yes. Big corporations might easily eat that balance. So because of that, I don't think we're gonna have a recession anytime this decade. I don't even think it's possible. I don't see any mechanism to happen. The stock market's not even overly inflated since the COVID lows. We're barely up 100% off the COVID lows. In hindsight, there have been markets that have rallied thousands of percent off of over the previous recession lows before they moved. So COVID lows, I guess would say, actually, sorry, we're actually 200%. I'm just an idiot. 200% higher off the COVID lows. But if you go back to like the 80s, right, we had some big recessions after the big 87 crash. 184 to about 1600. I mean, the market went up like 900% before the next recession. A bubble is like that exponential growth over time. And we barely started. I mean, if you compare the 87, it would be, we're like here right now. So the market can go through a period of like prosperity, which we probably will. I think we will. And this crash was kind of like, you know, pretty significant. I mean, it was about 15% or whatever, but yeah, but I mean, you have to think about it like this. We don't really have any mechanism for a bear market. There's nothing. Wall Street's not betting on one. The data is not showing anybody betting on one. No. Yeah. I don't think we're gonna get one anytime soon. Can this market do something? I know. S&P, baby. That's why I got on the S&P. Let me take that money on that one too. Just like cash out and take profit on these. Okay. Not bad. Oh. All right. There we go. Oops. This is the only trades I made today. I haven't touched anything else. Just these Tradeifys. I know this is not a lot, but at least it's something. I guess I wasn't paying attention. I thought I made 1,000 on the first trade. I actually only made 994. So that's it today. Not too bad. It's like almost 4 grand. Oops. Let's put that here for you guys to see. I didn't touch anything else. I didn't touch my funded futures account. I didn't touch anything. Anything else? Okay. I'm talking to the folks at Funded Next right now to see. They said they're doing some updates on their system. So I think what happened is they just got their normal process, I guess, was more of a manual process, and it just got overwhelmed. And because of that, they're having to staff up or update or something. Just makes sense. Masterful trade. Thank you, thank you, thank you. Now rotation ES from NASDAQ. Well, I jumped in the NASDAQ, at the start, and I jumped in ES after because ES was the one that was actually not going anywhere. And I went and looked at the sector tracker. I saw in the sector tracker that we were rotating into tech at the start of the day, which means that NASDAQ was the powerful one. And I saw discretionary and a couple others kind of speeding up. And I said, well, looks like we're going to rotate in the S&P. Energy started doing well. Consumer discretionary was doing well. Industrials are doing well. So as we saw the NASDAQ bump and the S&P going nowhere, actually jumped into the S&P. And that was the big run, much better than NASDAQ was on that second leg. And that was, thank you, masterful trade. I appreciate that. NASDAQ's first run came to here and then just retraced to there. percent basis, S&P grew faster, and that was a split decision I made to trade S&P because it was the one that was lagging behind. And at the time, it was just as good looking as NASDAQ on the resilience side. So not as bad, but decent. Just look at 2022. Lots of knee-jerk layoffs because business had to reverse. So I disagree. I think currently big corps are very quick to want to cut cost. Nope. I don't know anybody in my circles that are, I mean, in energy, yeah, some people are getting laid off, but that's normal circumstance. Like I'm not seeing like massive layoffs. Some friends of mine at Chevron are going through layoffs, but that's independent of the economy. That's an oil thing. Oil prices are, projects are down, oil prices are down. So that's just normal in the engineering world. Credit card debt all the time high, savings all the time lows, people buying food on 4 payments. I mean, but that's the thing that we've been through such tougher times as an economy that while some people are buying food with 4 payments, it's not that bad where I live. I don't know. My grocery bill isn't 300-400% more than what it was before. My grocery bill is noticeably bigger, but it's not struggling bigger. When I go out to eat at a sushi restaurant where my bill is like $1,200, it's still packed full of people. When I go out to eat at Jack in the Box, there's still a line circling the block. I don't see people struggling to buy food, rich or poor, for my position. Now, again, I live in a big city. I see everywhere I go, there's a wait. I don't walk into a place and I go to the mall, it's packed full of people. It seems like maybe people are complaining, yes. Maybe it's a little less prosperous than before, yes. But it's not in that threatening the infrastructure of the world mode yet. Milk isn't like $19 a gallon. Eggs were what, at worst, double the price, I think, earlier in the year, or late last year. In 2022, the reason businesses had to reverse through the moon, there's one more thing. You're not wrong, but don't discount the real reason 2022 is recession, because it's post-COVID was the problem. Okay, here's what happened. The reason 2022's recession happened is because of this one mechanic. The market in COVID laid off everybody. Everybody was unemployed. Okay. Companies now had all of these jobs to fill and nobody wanted to work because they believed in a super death pandemic that's going to kill them. So nobody wanted to go back to work. Everybody's sitting at home. But these are all, let's just pretend that these are all trucking companies, right? Trucking jobs. And they say, okay, you know what? They shut down the world, but now we're opening back up. We need a job. And now everything that got shut down, everything shut down. So prices of all things went through the roof due to shortages. This is step one. Shortages raise prices for things. Because of shortages and because of the risk of the super crazy death flu that I had 3 times, it didn't kill me. But because the media made you think it was super crazy death flu, people were scared to go back to work. So the demand was high for the job once everything opened back up, but the supply was low. And the combination of these 3 things, demand was way up. Everybody opened their doors, but the supply was way low because everybody says, no, I'm scared of dying. No. But the one guy that's like, hey, I'll take the job. But like prices are high, shortage and stuff, and it's kind of risky, and you're going to pay me double what you paid me before. Yeah, I ain't going to pay you double. That's fine. He will. Yeah, I'll pay you double. And this guy goes, oh, wait, he's paying him double. Shit. Okay, I'll pay you double, but a little bit more. No, I'll pay you triple. Yeah, we need to get back to rolling. We'll pay whatever. Just get to work. And the guy's like, sure, I'll take 3x my salary. Let's jump in here. I don't know how many of you guys got like double X your salary for your jobs, right? But that mechanic caused an inflation in wages, right? To account for the shortages from COVID, the over imbalance of supply of jobs and demand for jobs and lack of supply. So people jumped in these ridiculously high paying jobs just because companies needed to get the ball rolling again. But there were still shortages, and therefore they were making tons and tons of money, but having to spend it all anyways on the over-exaggerated prices for things. And also because of the shortages, there wasn't enough commerce to support that inflated salary. Houses were twice as much, right? everything was twice as much and people were making twice as much to pay for the things that were twice as much. It was like companies were shelling out a whole lot more money to cover inflation that was brought on by COVID, but it wasn't creating more prosperity for the company because they were just spinning their wheels in the dirt because there wasn't any increase in economic activity for the increased output of the company. Therefore, in 2022, they had to do spontaneous layoffs of you get paid double your salary, just sit on your ass and go to a Zoom call 3 times a week and not actually do any work. So that was really why the layoffs happened in 2022, because you had all these people getting paid this ridiculous amounts of money and the output wasn't there and they were no longer needed. When you send everybody to work at home and do Zoom calls at 3 times their salary, as a genius running a company, you might say, oh yeah, we don't really need that person. You know what I mean? So you're not wrong, but the mechanism of that 2022 recession had very little to do with anything other than post-COVID effects, right? And I agree with, there's a lot of reasons to it. You said companies had to knee-jerk layoffs, the business had to reverse. That's why they had to reverse. How many people here sat on their ass and got paid 150% raises so they can go to a Zoom call 3 times a week, right? Not really do much work. Companies realize they didn't need a lot in place, how to let them go. Right now is a different environment. Companies need people. We are growing. Companies have free cash to spend. The earnings reports are all doing well, even in this environment with the tariffs. So because tariffs are going to add a 10 to 15% cost, that's not the same as double somebody's salary, which is 100% cost for the labor. When the labor prices went through the roof, yeah, you got to lay those people off. But 15% tariffs and 5% inflation, I don't think will create the knee-jerk reactions that the previous recession caused. There will be some layoffs in certain sectors and kind of spotty, but it's not a ridiculous like wage bubble and shortage bubble, right? So it's not, I don't think it's gonna be as drastic this time around. So I think it was an opportunity, yeah, to like take out some of the high salaries. And I think you're 100% right with that. You're absolutely right about 2022. And the idea is now is it's not as drastic as then. The inflation is lower unless the tariffs come in higher. And the real problem is if the companies have to face hundreds of % tariffs, will certain companies have knee-jerk layoffs? And the answer is maybe, because the difference is when you laid somebody off, it's because they were unneeded. But as long as the commerce is there to support the price raise, the company's not going to let the employee go that makes that thing that they're going to sell, because they're still making the sale. They have to see the effect of losing sales and lay off the person. But then that means they got to have to cut off their whole supply line. Yeah, we're not going to make this product anymore because the tariffs are too high. So sorry, I know we make shirts and hats. We're no longer making hats because we built them and made them in China. So we're removing hats from our product lineup. We got to let go of our hat division. Okay, then that will cause the layoffs, right? But the additional cost doesn't come from an employee getting paid too much. The additional cost comes from the tax. So that it's unavoidable. If the company wants to continue making that thing, they need the employees. So they may not, my belief is they may not cut people off. They may just eat the cost, because it's more expensive to lay people off than it is to eat the cost. I feel to lay them off and then bring them back when the tariffs go away or whatever. Or they'll adjust, right? They'll make new business relationships first before they lay off the employees. Here's what we're going to do. We made our hats in China. Let's go make them in, I don't know, Ecuador. So I don't know. I'm just making up a country, right? They might find a better manufacturer, which may have a little initial cost up front, but they may invest the money into that before they cut out their division. Cutting out an employee that's unneeded with a high salary didn't necessarily have to stop their division. You just had 5 accounts. You realize you only need 2 because you realize how little work they actually did. And that's what caused the layoffs the first time. But the layoffs weren't coming in 2022 and 2023 because businesses were shutting down. It was mostly laying off expensive wages, right? Companies were actually growing at that time and just trying to make sure they were just cutting their corners as much as they could and trimming the fat. In this phase, the companies wouldn't be growing. They'd have to shut down entire product divisions and things. And yes, that can cause a recession. But my belief is that that takes years to compile up and then fall apart. So that's what I feel, is that the recession that could come from tariffs will take like 2, 3, 4, 5 years of kind of like struggle, and then it starts to kind of like tumble on itself. And that takes a lot of time. And that's how I feel. It's just a slower moving ship. So I don't think a recession is looming from the tariffs. I think a lot of companies are going to take hits. Some of them they're going to lay off. But for every company that's taken a tariff hit, there's going to be some competitor of theirs that's figured out a way to make a better relationship with someone else that doesn't have a tariff. Or there's going to be countries that are spawning up manufacturing facilities that take a year or two to build in countries without tariffs as well. And then they get the deal, and then they're prosperous when the company that's with the tariff isn't. And so I think that there's more ability for companies to adjust. There's more opportunities for businesses to, go up. Somebody goes up to a bank and says, "Hey, I want a $200 million loan." Why? Well, because I'm going to start building manufacturing facilities in these countries without tariffs. You're going to make a complete return on your money, bank, because I've got deals with Apple. I've got deals with Tesla already for this facility. And then so new companies are going to spawn up out of this tariff thing. It's going to offset the ones doing bad. The people that get laid off will have new jobs elsewhere. And that's how I feel. I feel like the companies will adjust faster than we'll have to have the economy fall. But that's just me. That's my bet. And I could be wrong. I could be overestimating the ability for companies to have free cash or patience for this. They may just say, "Fuck you guys. Y'all are laid off." But we'll see. My bet is with the companies are healthy enough to survive. And there's enough people with enough free money to invest in facilities. Even car companies are starting to build facilities over here. Wasn't it Hyundai or somebody that was building a facility in Alabama? Right? So I think there are companies that will be taking that risk. Was it Japan? Maybe it's Japan, right? And it just leads me to believe that will create jobs faster than it'll eliminate them. Yes, certain companies will lay off. But for every company 2 years from now that lays off people, "Oh, have you heard this new engineering facility popped up? Yeah, it's weird. They're doing work with this other country. They're manufacturing stuff and there's no tariff there. And they're hiring like crazy. Oh, that's great, man. I just got laid off." Perfect. It's like, I think it's going to be like that, right? Instead of like a, and it's just kind of the boat I'm in right now. And if I was to make a bet, that's what I feel, right? C-suite people hate how much they spend on employees. Yeah, 100%, right? Release and obviously like reducing labor expenses is going to be a big part of it. But I don't know if there's a way for them to like tariffs are a different kind of problem, right? The tariff is a cost on top of the product. And if you're paying a lot of money on tariffs, it's because you're selling a lot of product. And it's not necessarily a bad thing. You'll be looking to trim costs in whatever case. So maybe you might say, okay, we need to sell this product, but cut the bottom line. So let's lay off 1 of the 10 people. It's not like we got to cut the product immediately because of the shortages. Let's cut off everybody. COVID in 2022 was like, let's lay off everybody. COVID was like, everybody's got to go. We're not making anything anymore. 2022 was like, the Zoom call world kind of taught me that we don't need the 10 procurement people we have. We really only needed 3. So let's let 7 of them go. And then this world is going to be like, we need to trim and save a little bit of money to offset the 10 or 15%. We have 10 employees. Let's cut it down to 8. It's not going to be, we need to cut it down to 2 because then they can't make the product. The problem of the extra money comes from the extra sales. You're doing well. The more tariff you pay, the better you're doing, right? The more commerce you're doing, the more tax you're being hit with. So you're doing good. You're probably not going to lay off more than half of your workforce to keep your product lines open. So I believe any recession from tariffs because of that mentality will be much more mild in 2022. Hopefully that makes sense. That's a long answer for that question. But yeah, if they're like, sorry, we can't make hats anymore, we got to lay off the hat division. Okay, then that would be like a 2022 or even a COVID level layoff. We shut everything down. You guys got to go. We close down a whole manufacturing facility. There's tariffs. We can't, all you guys got to go. Goodbye. Well, yeah. But I think most people in the situation are going to be trying to cut that 10 or 15% fat, which might mean 10% or less of their labor force, which is bad, but not as bad as that was, I think. Right. Chase to break highs today. Let's see, man. I made pretty decent trades today. I love kind of today's setup was pretty decent, pretty easy. Do you guys have fun with that one? That wasn't too bad. But yeah, I know it was a long conversation, but I don't think a recession is imminent. I think a recession is possible, but it will take time to spiral into that. And that's why I say not this decade. If we have some kind of fallout due to tariffs, it'll be after companies struggling for 2 or 3 or 4 years of trying to become efficient and not being able to become efficient. And then we start to turn those 5 and 10% layoffs into 20 and 30 and 40. Yeah. Initially, you might see a little bit of fat trimming due to tariffs, but that's why we watch the initial jobless claims and the JOLTS to kind of really monitor that. The initial jobless claims since Trump came into office, we haven't seen much of an increase. Anything below 250 a week is pretty average for a normal market. We haven't seen a lot of unemployment filing spikes. We haven't seen anything above 250. And normally you'll see things above 250, like in COVID when everybody gets laid off. You had 7 million people filing for unemployment. Look how crazy that was. And it took many years for it to get below to the 250,000 a week, as it normally is in a bull market. Back in the days of quantitative easing, post-2008 recession, we had kind of like that same boat, right? You had 200,000 was about where we sat pretty into that next recession that was caused by COVID. But you can see that even in a normal strong bull market, 250 and less is pretty normal for the last 3 years of the rally. When things get bad, you start to see lots of layoffs. And we saw the same thing back in 2008, 2010, even in 1987, created 82 was a big recession. Early 90s was a big layoff recession from the 87 crash and everything else we had. When the stock market was growing, 2000 market crash was a recession. Of course, 2008 market crash was a recession. And the way the tariffs are already hitting home now, some businesses are feeling the pain, but yet we're not seeing any changes in this data that's alarming. It's actually very healthy. So that's why my stance is so strong and that the companies are doing okay. And they haven't laid people off yet. We've had tariffs or threats of tariffs or problems of tariffs ever since Trump took office. Right here, he said, I'm going to put tariffs on everybody. And we've kind of stayed neutral so far. Big corporations, a lot of my friends haven't got laid off yet. Spot reasons, like my friends at Chevron are about to get laid off, but that's because of oil prices, not really related to the economy or anything. Normal cycling in the oil world, you staff up for a big project and you lay off when it's over, right? It's pretty normal. But so far, we haven't seen a global meltdown due to any of the tariffs yet, but it's still kind of new. We'll have to start to see these numbers start to tail up, and these come out every Thursday, right? I watch them like a hawk, man, and every day they've come out less than 250. I'm like, we're doing fine. So yeah, we should be good. You think this is most like the 2000, 2001 setup? I absolutely 100% agree with you. And just like the dot-com bubble, right, where you have a bunch of employees churning out nothing, right? You can think of tariffs as basically being like, it's hard to sell something because it costs too much. In 2001, it's hard to sell something because your company doesn't sell anything. You made a promise to have a product and you staffed up for a company and you really don't have anything to sell yet. You're just some fake .com that's trying to sell something, but there's no commerce for it. Kind of the same thing as a tariff, right? You have staffed up for a product that nobody can buy, and you got to start to build a bubble and lay off. In 2001, bubble started growing really quickly in 1996 when Greenspan was cutting rates on Clinton's second term, and the market was like raising rate, or they were cutting rates in the 96, and they had to start raising rates to slow down the growth. And that spurred a big bubble into this .com that from 1997 until 2000s, for like 3 or 4 years, we create a bubble that finally popped. And the 2 or 3 year lag time on that is what I think we would have with a tariff related recession. Yeah, very similar to 2000, 2001. A lag time of a couple years before it pops. Yep. 100% agree. This is the most comparative to that bubble. It's, again, if you look at it kind of like the way I said earlier, was just essentially in that time period, you had a bunch of employees making stuff that nobody could buy, or because they weren't making stuff. A bunch of employees trying to make stuff that nobody was buying. And therefore, companies were making money. They couldn't pay back their loans. All these startups are failing. All these venture capital firms are losing money, et cetera. And then things just kind of popped because investors went too happy into it. And probably from about 1990, I would say the .com bubble started in the mid 90s. and started having its kind of wobbly phase once we started having the rate hikes back here. And then we knew that the end was here and we knew it was a bubble. And then it started kind of shattering. That volatility started getting crazy at the top of the bubble and then it popped. You can see how like we were rapidly rallying here. Then you got your rate hike world and then you got crazy volatility as companies were doing bad. And then it's sort of just like, pooped on itself. And I think we could get to this. But once the companies haven't entered their struggle phase yet, which I think is that lag time you have before the recession, we're still kind of at that, okay, here's the maybe turmoil phase. But you're going to have like a period of prosperity where companies are struggling. And then finally they, there's no more cash or credit or whatever to survive. And one by one, people can start toppling. Now, I don't think entire companies are going to fail, right? Because of tariffs. But I think that the same mechanism is here for a milder recession of the same accord, but 3 to 5 years out. Like we enter the phase of prosperity, right? Then it's choppy and then some companies do bad. And maybe we pull back maybe 5, 10, 15%, but not like 30 or 40%, right? Not market crash level. I don't feel it's possible. So right when Trump leaves office, yeah, I mean, there could be like a drastic change to the infrastructure. And hell, by the time things get bad, Trump could leave office and then the next president, whoever it is, maybe it's Vance, maybe it's Hillary Clinton, who freaking knows? Maybe it's, I don't know, Michelle Obama, whoever's running, I don't know. Maybe they step in and say, hey, this tariff thing was a bad idea. Let's get rid of it. And then all of a sudden, the market forgets overnight and the world forgets overnight what it was like. And the recession ends the next day as companies now can start hiring people back. Right? So if it's Michelle, you'll move to Puerto Rico. Yeah, I'd probably join you, bro. Paris Hilton for 2029. I'm in. Let's vote. But yeah, Japan holds $1.9 trillion worth of our debt. Look it up. They're their biggest bag holder. Yeah. The green and right box is just don't worry about the colors. It's just a 50% retracement area from low to high. I'm just measuring the move. Like I basically do this so I can get the numbers, right? Of how far the move is. I look at these numbers here. 38 to 63. And I know where the midpoint is. Just so I can keep track of how far the move has gone. And what should we be like? The numbers would be printed. Maybe I can do it. The numbers printed on the right. Do that. Labels. Aha, that's what I want to see. Perfect. That makes it even easier for my job. Biden in 2029. Yeah. Nice, clean, gentle run up in the market. Nothing's bad looking here. Nothing looks like it's going to pull this market down. Almost time for giveaway, you guys. Been crushing it today. Nice and clean. Having a good time on this one. I'll be streaming again after I go on My Fun and Futures TV, so y'all come back after that. Almost giveaway time, you guys. Nice, beautiful trickle up market. I love that red candle I got to grab those longs again. Now, I haven't touched it since then. Again, when markets are trickling up like this, I don't have good entry points unless I get like a dip to buy. We can go right up to these upper DD bands. I love tapping those things. That's just a cool, easy day. This is such a clean, easy day for everybody. Positive resilience, bounce on half gap. You guys know the drill. I always hit these trades light. I don't necessarily hit them super heavy. But I would like to reserve the stronger pivots for my more important accounts. That's kind of how I normally trade. But I'll put something in my pocket on this. Can't complain. You're gonna get like 3 or 4 days like this in a row. This is a nice, clean, good trading day setup. I think we have new support. This 21,640 level, and to finalize the day, in case there is a continual rally, there's good support right there, just like yesterday. The 640 level was one of the key supports from yesterday that we were talking about. And I probably might frame a commit to trade there. Commit to trade is where I just jump in on something on a pullback and I commit to the trade to complete the move all the way up to there, which is very possible today, but I don't know if we have any more news or mechanisms to get us there. But trickling up higher, I definitely want to take scalps along the way up. I hate sitting in a position with possible, you know, random news to come up out of nowhere. Draw a straight line there. Bring in IDOC and Pickles. She went out of town for a week. Very sad. All right, I'm gonna do. I want you guys for science. I'm making a plea with Fund and Next about the KYC process. I'm trying to get them to change it, by the way. So I'm actually talking to them right now. Everyone in chat, do me a favor. Type in chat. Just be honest. And if you don't type, that's okay. But if you type, I'm just gonna take a screenshot and show them kind of like what the consensus is. Just one line per person. Have you ever had to do a KYC type process with an interview to go funded? Once you pass an eval account with any firm, type firm-no or firm-yes. I want a good round number because I want them to see that the KYC process in the United States is very light. Just take the firm/yes or the firm/no. Jesus fucking Christ. Listen to the instructions. I love you guys. Type in the firm, not firm. not the word firm. Oh my God. I love you guys. Start over. Top step / no, apex / yes. Just one time. One time. Don't type the word. Oh my God. I hate all of you. I hate all of you. Oh my God. I hate y'all so. I'm so bad. I didn't give you good instructions. That's all on me, guys. All right. I'm going to take a picture. Have you had to do I'm going to take a couple of screenshots. Okay. No more laughing. Just type. I'm going to take a couple screenshots of what people are saying. I'm going to count it up. Okay. Thank you. Thank you. Thank you. Jesus Christ, Simon, you're fired. You're fired. I hate all of you. Jay Rimmer actually types the word firm, hate all of you. That's hilarious. I hate all of you guys. Okay, thank you. Thank you. I'm going to tell them I take a poll. This is my science, okay? Okay, let me let them know. I asked stream for an honest poll, which firm they were with, and if they ever had to do a video or extensive KYC to go funded. Thank you guys. I really appreciate this stuff. I'm showing them proof that I'm asking you guys these questions. So everybody's like, yes, no, firm, no. My bad. That's on me. I didn't actually tell you which firm. Type in the firm you're trading with. Pickle, maybe. Oh my God. Let me see. So, if you guys can do me one more thing, type if you can, what's the most that a firm made you do? Type in like top step / sign an agreement before you go to funded. I'm going to convince them to make this process easier. This is what I'm trying to do with this. I'm literally talking to the owner right now. Can you type in like Apex, sign an e-form, top step, send in a blood sample. Like, what did you have to do to go from A to B? And just be like, whatever, sign an agreement, right? Okay. And if I can get like maybe like 50 people to say something there, I'm going to also take a picture and show them. Because remember, they do business globally, but doing business in the States is a little different. You guys are used to like a different kind of like mindset, right? Like y'all are used to a different type of, a different way that we approach props. We're kind of more spoiled or more lenient here than, everywhere else. So that, again, this is an educational opportunity for them. And they're very eager to learn how we do stuff. So I'm very eager to help them. Okay. Thank you guys. I really appreciate your help. We actually work really hard to inspire change in the prop industry. We've worked really hard with ETF to help them redesign their products, and their products are now top of the line. They redesigned their static. They redesigned their direct to funded program because of you guys. Now I'm going to get funded next to make their onboarding process easier. Diddy party and NDA. They're so funny. That's cool. Just lather up in baby oil and you guys are fine. Thank you guys. Appreciate it. Apex, your left hand. You're so funny. Thank you for your honest answers and thank you for your funny answers. What was the most they had to do to go from eval to funded? Interview, agreement, etc. This is really helpful. Just so when I say, like, for me, I really enjoy the idea that we can actually make the prop space better, for us. I mean, it makes it easier for us to use these things. Firm and KY Jelly. Apex did ask for interviews when you started making money. Right, that's kind of the thing. Bullenhawk semen sample, Tyler. These guys have fun and next are gonna just be laughing at this photo. All right, thank you guys. With as much as you get funded, Ty, you must have like sprained your wrist, bro. From as many funded accounts as you have. Oh, that's funny. Tyler's the guy that walks into the facility and they're like, "Sir, you were only supposed to fill the cup up to the line, not all the way to the top." He's like coming out. Can I get more videos? Can I get some more? Can I get some more magazines? Sir, you know you only need to fill it to the line. Okay, so I don't know if I say days like this are great. They're fun. They're easy, but I need an entry point, right? How do I get in on this? And what can I find that's pretty decent as far as the setup goes? Now, as far as supports are, I don't really have any pivots to trade off of. Let's see if I have a justification in some of the stocks. NVIDIA just moved up. Apple moving up. Apple breaking MHP. So there's still some stocks that have potential to move from here. All right, we'll do giveaway in like 10 minutes, you guys. Hang tight. I want y'all to type TPT in chat, though. That's what we do here. All right, so where are some good pivots to trade off of here? The 640 level can be a commit to trade, I think. But I just need a good pivot, man. What about S&P? Same thing. 60. That was that candle, that opportunity was perfect. I love that I got in on that. Got out right here and I'm just now chilling. I've missed out on the last 8 points of move, but it's kind of fine. Like I said, I want to get good trades. I want like 20K days, 10K days with this good bull market. I don't want to just trickle up and make a couple $100 here and there. I really want to hit it hard. Wait. The owners of Funded Next just messaged me and they said, thank you, Tyler, for your recommendation. We're now going to switch our KYC model to providing semen samples. So they are listening to us, which is good. And because of that, we see those changes happen tomorrow, which is great. I guess female traders are out of luck, I guess. I don't know. Yep. So there you go. Good. That's good news for Victor. Victor's like, I'm on it. Oh gosh, that's funny. That's hilarious. That's the KYC now has a different meaning. You know what I'm saying? They put the K now. Tyler puts the KY in KYC. If you catch my drift. God, these jokes are getting so bad. They told you to stop coming back. I'm sure they did tell you to stop coming back. Okay, we gotta stop. This is just no. Sir, this is your 5th time here this week. Yeah, but the coffee's good, All right, you guys ready to spin the wheel? The K. Oh my god. You guys are degenerates. That's why we're friends. Okay, ready? I'm gonna spin the wheel. A little bit of a, you know, hedge pressure resilience. Maybe some support in the bull zone. Everything rocket scooter. It's all you need and all you want. Trump dancer. All right, 2 winner CPT accounts. These are the 50Ks or 21Ks or something. I'll figure it out later. I forgot. 50Ks. Thanks for tuning into the stream today. Don't forget to sub to the channel. We're here every day. Transparent trader, trying to go live with Tradeify. I'm a live trader with ETF. I'm a live trader with My Funded Futures. Live meaning I have a live real trading account with these firms. Rarest of the rare, but stay around. You can watch my journey. Bible time with Mama K is the winner of today's first giveaway. That's cool. Do you have a channel? It sounds like a YouTube channel name or something. Is this a like a Bible study reading channel for kids or something? Sounds kind of cool. Mama K, good job. All I have to do is type something in chat to claim your prize. Just type anything in chat. You got 30-second countdown to claim your prize. Mama K! Mama K! Mama K, running across the house, run to your computer. Come on, I'm gonna push the button. Where are you at, Mama K? No. Sorry, Mama K. I'm going to give her 5 more seconds because I'm a Catholic. Okay. Oh, she didn't make it. Oh, well. Sorry, Mama K. JM. All right, one more. 2 people. JM, congrats. Some days we give away 2, some days we give away 5, some days we give away 10. It's all different every day. Brian Brady, next winner. Congratulations. This is going to be for a 50K test account. Congrats, guys. Type something in chat. You are today's winners. 2 today. We'll have bigger giveaways tomorrow. It's the start of the month. I get all my accounts refreshed. I make new deals every month with these prop firms. And in the process of chatting with them, negotiating for this month to hopefully get a whole lot more than we had last month. Brian Brady, type something in chat, buddy. Or don't say anything, Brian. You want an account last week, Alec? Yeah, so if you want an account and you didn't message me and within 24 hours, you forfeit your prize. So you have an hour, within an hour, you forfeit your prize. Just letting you guys know. Congratulations, winners. If you didn't message me within the hour, that's the thing. So listen closely. Message me within an hour of right now. Send me a picture of your YouTube account so that I know that's you. Message me in my Discord, link below. Go to the Discord. Rocket Scooter. Discord. You did? You sent me a friend invite on Discord? If you send me a message or send me a friend request in the time frame, then I'll get you. I'll check the timestamp. You should be fine, Alec. You're good. You're good. I was waiting for you to message me, but yeah, you're good. You're good. Everyone else, message me straight up. Brian didn't show. All right, well, one more time. So I'm gonna get an entry point on this long. Boom. Brian didn't claim. I know Morris is here. Every morning Morris is here. So listen guys, don't go anywhere. Stay here. In 1 hour, I'm going to be on the My Funded Futures TV show. And I'm going to bring you guys onto that. I'm telling you, every time I've been on, and I'm on it every day, they give away accounts like crazy at My Funded Futures. So I'm telling you, every day on the show in that hour, they've done a giveaway. Big ones, like 10, 20, 50 accounts. It's crazy. Is it like, are these the names from yesterday? There's Morris. What's up, dude? Okay, I see him. Congrats, buddy. Okay, Morris and JM. All right, you guys know the drill. Morris, you're in Discord. JM, I think you're Discord as well. You guys know it. All right. Send me that message. I know you're you, but send me a message. Congrats, guys. Okay. In about an hour, more giveaways. So stay here because I'll walk you guys over to that show whenever it starts and we'll show how it works. And then after the show, we come right back here. We'll be streaming in the afternoon. So you can make some more money out of this market today. Loving it. Okay. All right. Congrats. Any idea what's going on with the TPT data feed? Can't trade your accounts? I don't know. Are they down today? How their giveaways work at My Funded? They have different ways to do it. Sometimes they'll throw a code on the stream and like the next 50 people that put in the code get a free account. Yesterday, we spun a wheel and like 10 people won. If their name was drawn, you'd win. Other times, they'll pop a form in chat. You can type in something and then they give you an account that way. Afternoon sesh. So just stay with me. I'll walk you guys through like when the sessions are. At 11:30, we all raid My Funded Futures. I go over there and host my hour-long segment at lunch money with Matt. And then as soon as that is over at 12:30 Central, so 12:30 to 1:30 Eastern, then we come right back over here on YouTube to finish out the day. Where do you put the code in? Bro, they're trying to figure it out. I told them that giveaways are the way to grow their stream. That's what I told them. And they're like, this is a good idea. And they're doing a ton of giveaways. And the thing is that doing giveaways in bulk on YouTube is limited by YouTube. It's really hard to do that because YouTube doesn't have the kind of facilities to be able to do a big crazy giveaway. But we're researching ways to do it. And as soon as they figure out how to do it, I'm going to do it too on mine, because when you're giving away 50 accounts, it's really hard because YouTube, you have to connect somebody in YouTube to some data collecting mechanism outside of YouTube. And YouTube isn't really friendly that way. There are some bots like this Botrix that I use that allows me to have people type in chat and it reads your chat to make sure you won. That's kind of cool when you spin a wheel, but the wheel takes a minute to spin. There's no way you can just like spin that wheel and choose 20 winners. I wish there was. But I think somebody, if anybody here, some of you programmers, if y'all want to write me like a browser add-on, somebody actually reads this and then just, it's an add-on that can modify this page for me that I can just click a button and pick 20 names at once. That'd be kind of cool. I can type in the number of names I want to pick or something, a browser extension or whatever. We got to move over to Twitch. Yeah, that would be kind of cool. But I think that there's we can make our own. Maybe we can make the program. I don't even know. You can write one, Matt. Yeah, like some kind of browser add-on or something. It just interfaces with Botrix and allows you to do it. And I'll give it to the My Funded people, and then they can just click a button and it pops 20 names out of that little frame there. Hurry, enter the code model. Yeah, because hurry to enter the code model is just crazy. You're like sitting there with your hand on the mouse, ready to cut and paste. Now, the difference is the mechanism of streams that pick multiple winners. What is it that they're doing? Are they just manually picking winners? What kind of software are they using? What kind of package are they using? Like, is it a graphic on stream that spins a wheel? Is it a thing that people type in a form and then it picks from that? What are some of the ones that you guys have seen? We can check it out. You like the code on the screen? It's kind of a game, right? It's like who can get the code in the fastest. Is there a giveaway right now? There was one right now, but you missed it. But stay tuned because we're going to have giveaways in about an hour. So, yeah. You still can't get Funded Next connected. They're saying it's market data you need to buy from Funded Next. Both Tradeify and Funded Next are saying the other one needs to offer the market data. Right. You buy your market data subscription when you open your account. And usually Tradeify has a pop-up that asks you to buy your data. And it's goes through the prop firm though, but it's offered by Tradeify. That's probably why they're both putting you in different directions. Bug the prop firm, okay? Tradeify, not Tradeify, sorry. Tradeify. They're just like the API and the software. The prop firm needs to trigger your account to that. They need to, when you first log in to Tradeify, the screen pops up, your subscriber market data agreement, and you had to have signed that. Now, if not, I think in the platform, again, I'm not an expert at Tradeify, but there might be a section in your settings where you go to like your account or something that might have like agreements or something. Like go to account. Here we go. Log in to your account on Tradeify with that prop firm. Then go to subscriptions under your account settings. And then there is a membership that you'll find that has that info. Okay, do that. New life, you follow? Where do I type the MFF code at checkout? I think it's a checkout when they do it. Yeah, so see if that gets you your thing. And the subscriptions, it'll say like, mine says Tradeify monthly, $0 per month, build monthly, change plan, cancel plan, etc. So maybe do your plan from there. So it's weird that like, it's the prop firm that gives you the data because they pay the data package to redistribute. And Tradeify is like, that's not us, but it's Tradeify's platform that you need to sign the agreement in. But it's all automated process. That's why they're pointing at each other. You tried that in the scene we didn't show? Did you accidentally buy a CFD account? Funded Next instead of a futures account? Market Scooter, burr. Correct, and you called them? Okay, well, that's the thing. You're in a very special circumstance. You bought a CFD account, which Tradeify doesn't support. You need a futures account. You called them, what'd they say? I've already yelled at them enough about fixing their funnel. Trust me. Oh, okay. Balki, you blew one of the Funded Next evals with no DLL. Will you still get DLL if you reset? I don't think you do get DLL. You get the no DLL on resets. What is this one? Yeah, if you want, send me information, New Life. Send me a Discord, more detailed information. I'll get it straight to them. Like I'll go straight to the source. With you guys, we have a path to the top with this firm, so we don't have to go through customer service. Again, a day like yesterday, markets trickling up. They're really, I don't see anything that's pulling this market back. Man, I need an entry point. Like I really do. I would love to get an entry point. Yeah, I'm not sure if now their system may be a certain way that I think what they said. Hold on, fill out the agreement from your active. Oh, okay. Okay. I don't see the agreement. Yeah, it's weird. It says, yeah, so I'm trying to get my KYC agreement here. Let you guys know how. Yeah, but if you reset your account, you don't get if you reset your account, you don't get the no DLL. If that's what you're asking. Sorry, my bad. Doing like 50 things at once. So in about 1 hour, we'll be on My Fund and Futures TV. I have a daily segment there, you guys. So come on over and support that. We really appreciate that. And I'll be right back over here live trading, finish up the afternoon. We've been crushing it all day today. I'm excited about crushing it all day today. I need a good entry point here. So I just pushing higher and higher and higher, looking solid. I like it. Trying to see what's taking so long to get my no DLL account funded. Should take at max. the agreement that day after market close. Yep, no signals to fade, no signs the market's pulling back. These are solid. I don't have an entry point. The market is just, there's no pullback, there's no anything. I'd love to see a dip to buy, something to retest, but nothing, man. It's just like either just jump in and ride on it. But I took most of this trade earlier. We're up about another 10 points since then on the S&P. Am I trading on my funded futures? So I'm trading on a live account with these guys. So I have a live funded account. Is leaving a runner for possibility of a larger move? Well, right, because the runner is a 50-50 shot if random news comes out. In normal environments, yeah, Sean, but in the environment of Trump and trade war, I don't, because the random news could have that one runner dip and hit a stop loss, and then I'm already screwed. Right. In other environments, yeah, I would let a runner ride. The trade war era is kind of like a different time. I don't like being in the market that much. But next won't let you continue without KYC, but says not eligible for KYC in settings. Yeah. I'm gonna let them know that too. I'm in the same boat, J Reamer. And I already have funded accounts with them. I've already gotten paid out with them. This time around, it's a little like Is it frowned upon if you spam Rocket Scooter and MFF chat? No, you guys go in there and talk me up all you want. You show them who's the king of streaming. Y'all let them know. Y'all have to know that we're the boss, that we're the best, that you guys are the best. Tell them whatever you want. Try on another platform. The funded futures allow you to roll your profits over to a live account. Do you have to start over again like in other platforms? I think they roll. I would ask if Tyler's here, might know more about the question on how you can do that. Yeah, hard to get the funded next account. Dude, the same thing. Like, I'm in the same boat. Yeah. Honestly, they need to get their... They have 1 month to get their shit together for me. I'm going to give them a month. Hopefully they do. I like them. But, you know... I think that the process should be much better. Faster. You pass, again, nothing bad to say about them. I love them to death. But you pass the eval, you should have your account by the next day. That's pretty normal in most every prop firm we trade with. In their defense, they had this massive sale with probably like 1,000, like, you know, 1,000, maybe like 100x their traffic, I'm sure, in futures. They went from 0 to like 1,000 miles an hour overnight. So they probably got overwhelmed with their staff, and that happens. But It probably won't always be like that. Just the sale was so huge, and every influencer in the world was, like, picked it up and was selling it. That's what I just think is happening. Right, multi-day resistance testing a breakout. Yeah. Nice and clean, nice and steady. 59.95 S&P is my upper target. Nasdaq is 521743. And I think I might just like why the hell not maybe hold a run around Nasdaq. Like, there wouldn't be anything wrong with this. I can do a commit the trade from here. 673 to 750. That's almost like 100 Nasdaq points. Should we? Just one. I might as well just one in one account. Now, again, I have a 743 as an upper red line target. And just to have something to talk about while I'm on the show as well. Like, if I take a loss in this one account, I don't care. This is what I call a commit to trade. So I have support here. A stop at roughly 640. Then I have an exit target at 740. It's about a 1.75 to 1 setup. And that's just a hold a runner like I normally would do. Yeah, I'll do it today. Seems to be like a slow day. I'm not too terribly afraid of this market doing much, but I kind of want to just kind of hang in there in case something good happens. Oh, they're writing me back? Okay. Escalated it to their team. Okay. Thank you. Well, that was a good choice. Might as well. I'm just jumping in on it, whatever, with the stop loss. I've got a preset risk to reward. Playing inside of this range. If it breaks, it's good. If it doesn't, it doesn't. Any downside from here has no support except for way down here. That's the problem with like jumping into trades. This higher consolidation is kind of the middle of the range of what I want to look for. I do think with a rally like this of the substance, 743 is very possible. I mean, it's definitely nearby. Just like yesterday, just dance around. One final burp up to finish this move. Should be all right. All right, let's see what's going on here with this. I just jumped in. I mean, it's consolidating, pressing higher. Everything's looking good. S&P's looking good. Resilience is looking good. Stocks are moving. Kind of no fear of this. But like I said, I'll just commit to a trade. I'll take the brain. Like, this is a coin flip on the range break. And so the consolidation can pop higher. If it falls really far. With one contract, I'm not really too worried about losing too much in one account. I don't know where we can fall, but we do have resistance at 21,743. Kind of acts like a glue. Our two targets that I look for, S&P red line is also nearby. Be nice just to complete this move, 59.95. I took the opening trades like right out the door. I took this trade right here. Universe just gave it to me. That was nice. And now I'm kind of waiting to see, you know, there isn't a pullback, but even if there was one, it'd be kind of awesome to get in right here just to finish the move up, 59.95. Yeah, I think it's okay. My one little rinky-dink contract here. About 5K shy off your goal. Nice, dude. Nice, dude. Having 15K in a personal, that's amazing. That's like a really awesome goal. How to avoid chop and overcome emotions. Loaded 3P accounts that got wrecked in the triangle. How to avoid and see chop early. You're going to be faced with chop all the time. One of the things is to not chase. Like right now, I'm chasing a trade because I know that my position size is small. But don't, like, you know, wait for dips. Like right now, like wait for dips. The obvious thing to do is to like jump in on the trade, but always wait for dips. Wait for lows, wait for opportunities, and don't, you know, if there is chop is good. If you get in low at the bottom, the long, or get in high at the short. Never like short at the low or long at the top. That does introduce you and get you closer to chop when you don't want to be. Like me, like I'm getting chopped around, but I got one contract and I don't care. You know what I mean? I'd love to get a good long entry though. In this range would be very, very, very nice. In this midpoint, I might tap it with another contract. Middle here is nice and juicy. Actually, I might stop at 630. Take it right up to there. Give it like maybe 5 more minutes just to get a little tiny pullback here. This little range would be about, let's see, about the 65 area on the S&P. And this is what my runner is doing, taking a little bit of heat. All right, conditions are still good. The support is actually down here, which is the scarier part, but at least I want to try to get the rest of the move. Commit to trade just means I commit to the trade. Like, just retracing this full move right where this upper support was here. Upper resistance being the new support. I would say that inside of this range, this is a good area for support. If I wanted to be like a baller, I'll add to this spot right here with the stop loss at about 630. 30 points on NASDAQ is not that bad. Well, hey, there we go. Good deal. Can I get this run up? Trump is talking. Trump is always talking. What's he saying? DD ban on upper SP. Yep. That's the trade I'm looking for. Indicators are good. Resiliences are positive. Yeah, things look good and not too bad. This could try to work its way lower a little bit, but I'd like to see 630 kind of as a support area. The 740. Entry, stop, close. That's what all these letters mean on my chart here. And get the break to the other range here. That'd be kind of nice. Ooh, 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 ooh. I love making money. The R&R is good. Like I said, I the market can just fall underneath my feet with a giant red candle and just kind of like shit on this whole operation, but we'll see. This dude's trading is off the scales. Thank you, thank you. If we got to the new high, it'd be kind of nice. Put another $1,000 on this account, but at least riding it all the way up to 740 would be really good. On 2 NASDAQ contracts, it's pretty decent. If I can get the 60 points. It's 2,400 on 2. Trading it carefully. There's that consolidation. Watching resiliences look good. Nothing is lining up to look bad. You're breaking out? Hello. Oh, let's go. Let's go. Let's go. I love winning. I love winning. Ooh. I love winning. I love winning. I do. I do. I do. I do. I do. This is where I just dug in with an extra contract, and then I'm going to take profit on one of them and now hold a runner. That's pretty good. Can't complain about that. Let the runner run. Trending markets are the hardest to trade. Yeah, you just got to basically jump in at a good support. And obviously you see like where you get this kind of like, that's kind of hard to explain it, but like markets consolidating, right? And then it breaks up to a new level. This is the tracking algorithm, right? And I know a lot of people try to, there's different names for this, but the tracking algorithm, when the stocks are just picking up momentum on their own, somebody buys a bunch of stock, then somebody buys a bunch of stock, somebody buys a bunch of stock. You can see the index kind of moving in a similar fashion. The index is going to like be ebbing and flowing. And then somebody buys a bunch of stock and the index pushes to a new place. And the equilibrium where the algos are trying to hold price set to pin it to the value of all the stocks is at a new level. So usually you'll get kind of like this level it's hovering at, and then this new level it's hovering at. This is because between A and B, some stocks got bought up and the index just moved up higher to track it. And so inside of this range, like where that previous range was and this new range is, there's like an area where the market has moved to a new set point, and therefore the market's just tracking the stock buying out. If people were selling enough of that stock to go away, you'd kind of crash back into those ranges. So a lot of times bull markets will move like that. It won't necessarily give you dips because nobody's selling anything. The stock is just kind of like moving up in a linear fashion, and the index is like, okay, move up, move up, move up. As the stock moves in certain intervals, every so often the index will like reprice itself to a new range with a delay. And that's typically what you'll normally see. On nice solid bull days, the index like stair steps its way higher. Stocks like Nvidia probably move up in a straight line, right? And you'll get like a little bump out the door, but the index is not necessarily going straight up on that. It's like chopping on the way up. It's trying to track, but it also has its own independent trading, right? Yeah. Okay. Let me take profit on this. I'm about to get ready to go to my funded futures. I'd like to make a trade on the stream. No reason to close out on this. I'm just gonna go into the show flat. I'm gonna be distracted for like 10 or 15 minutes, and I'm not gonna be able to like really focus on the trade. I'd hate to jump on and things are going crazy. So I'm gonna take profit on that and just call it for a day for now, at least. And chill on that. And then why is a DD band your target exit? Well, it can be. It's just the red line is always that first resistance we're going to get. So an example is if we broke up to red line, like so, usually the move retraces off of it. So that's the first resistance off of the move. I always exit my longs off of my interrupt pivot. So even DD band is a possible pivot for the upside. Interrupt pivots always are my first major exit target for my bigger position. That red line is going to be high volume resistance for sure. Link to the next channel. We're not moving for like another 25 minutes, but let me give it to you guys. Hold on. Dude, it's so incredible seeing my funded futures stream get so big. We have a huge part in their growth. I really appreciate all of you guys for coming in there and showing your support. Right. That's the link to the next channel. Ooh. It's almost time for me to get another haircut. I gotta start looking fresh every day. Wait a minute. 743. Let me double check that that's the right. What the hell is that? No, that is not the right target. Okay, I'm actually even staring at the wrong target. It's not 743. Why do I had moved this line. Why did I move this line? I go into my teaching mode sometimes and I will. I'm not gonna lie. I'll be like giving a demonstration. I'll move my pivots or something. Or trying to draw them. Like, that's not the pivot. It's on 743. Where is it? Let me give you guys the real number. Don't listen to me. 719. Oh, it's 719. Okay. My bad, you guys. It's 719. I've changed. I've moved it around so much. It is 719. Okay. That was the wrong pivot. 719 is it. Now, there is no short setup off of that, but if there is a bear in this house or whatever, and you do want to short the market, the red lines are that pivot. If there is resistance there, and if there is selling pressure, it likely appears there. Not that I'm trying to short this or saying to short this, but there's always a bull for every bear out there. And if you're like, where do I fade this from? I personally, if I were to short or fade something, I'd wait for confluence. But pivots like this and pivots like this are the only two bear pivots that you got today. 719 and then roughly 772. The 96% of days you close below, etc. Support here. Red line is just a really solid resistance in general. Always strong resistance on those IPs and these illiquidity pivots. Can you get like a less pinky color? What color is this line actually? Okay, I think it is that red color. Okie dokie. I wonder if I actually were to make the text slightly bigger as well. I know it looks small. That might be better for you guys. Should I, like, is it better if I make these, like, words just really big? I can't even tell if it's, like... But I can't make the axis much bigger either. Let me make this, like, that big. Okay. Just a little bit bigger. What do you guys think? And bold, bigger and bolder, just like we are, baby. Bigger, bolder, better, faster, stronger. That's a little bit more understandable here. I can market you guys as sales team. Yeah, that'd be great. I'm bringing life to that MFF show. Well, thank you. I like to think I bring a life to any show. We have a unique flavor of trading. We're not so serious, but we're serious at the same time. We're probably the most serious day traders out there, the least gambler out there, the best system and style out there. I think I'm a little biased though. But also, we're not so like stuffy about day trading. We have fun at the same time. Looking great, brother. Well, thank you. Thank you. I need to update the 40% offer fund to next. Oh, you are absolutely right. Thank you, thank you, thank you. Yep, that's the one. You nailed it. Settings. Let me make sure I... Okay, and this one is... Thank you for reminding me. Let me turn This one on and this one on. There we go. That works. Do I see any chances of it moving downward? No, I don't. There's no evidence the market's going to sell off. There's zero evidence anybody selling. It can, but there's no evidence. Everything looks good. Stocks are good. Market's good. Index is good. Gamma's good. Everything's good. If it's sold, it would just randomly sell. And nobody can predict it. Right now, all signs across the board are clean. Everything's up. Everything's good. Everything's clean. As Gamma is saying, all technical indicators will be delayed, 100%. The only ones that aren't delayed are ones that make an attempt to try to be leading indicators based on leading indicator mathematics. Like resilience is designed to be a leading indicator. It's looking at something that's happening and looking at something that's delayed behind it and then letting you know it's delayed behind it. So the idea is it's trying to indicate something before it happens rather than chasing the price action, which is always a delayed indication, right? James Sullivan says, if anybody wants to know when it's time to short the market, he'll just let you know when he's buying because that's the time to do it. Please provide insights and price. Oh, I already answered that question. What does Matt do? He finds liquidity and he owns it. The red line is not different than ES. I just had moved it for some reason on NASDAQ and I don't know why. The ES level is at, oh, I know what happened. My platform had to be reset. And when your platform gets reset, it doesn't remember the drawings sometimes because they weren't cached. That is what happened. Okay, let me just make all these things like different. 95 is the level in the S&P and it's totally, that's the right level. So that was okay. Drawing your chart is helpful, especially when you get all this time just to chill and like wait, you know. You get plenty of time. You might as well do, you know, do something that's helpful. This is to help you guys though. I know what all these lines mean, so I don't really need this information for myself, but the S&P has not had any major pullback at all either. All right, so I'm putting in a note to move the watch list from the bottom to the right. I'm going to put the watch list over here because I hate leaving it open. It shrinks the chart. So we can see more of the chart that way. So I'm going to have this fixed this week. So watch list, you guys, is going to be over here off to the right. Oh, looks like it's rolling up. Oh, I almost wish I left some runners on. But it is what it is, you guys. All right, I'll be right back. I'm going to take a quick little bathroom break. Don't go anywhere. But when I come back, I'll give you guys instructions on how to get over to My Funded Futures and win some accounts. We'll be over there live in about 10 minutes, and I'll be right back. Hang tight. All right, guys. Y'all in that trade? You guys long? Y'all making any money? Put some rockets in chat. Let's see it. Nice little long breakout there. Finally, time to pay out. I closed because I wasn't going to be able to pay much attention, but that was the illiquidity pivot right there. 719 is the new target. You guys are man, you guys are crushing. I love y'all. All right, let me get ready to hop on over into my new channel here. Let me find it really quick.
App. And if we see this,
you're ready to head on over there. All right, you guys, in 5 minutes, we'll be heading on out, but let's just chill here for a little bit. Chief has 2 accounts today. Let's go. Love it, man. All right, one more thing, you guys. I'm going straight to the top. If you are with Funded Next right now, and you're having like a delay getting your funded account or whatever, any delays, send me your email and for Funded Next, give me a little information. I'm kicking you guys to the front of the line. I'm like Disney World, baby. I got the VIP no line pass. I get you guys right to the front of the line. At the owner's texting me. My people especially, they will work on it immediately. Give me your emails. I told them, I said, I'm skipping customer service. Can you guys help me out now? They're like, send me the emails. Who's got issues in their KYC? They're just overwhelmed, I think is what's happening. They've got so many accounts. And on their defense, they threw the biggest sale in prop firm history. Clearly, they've got, it's understandable. We understand. I get it. Brand new restaurant opens. You're going to wait a little bit to get a table. I know. Go out on Valentine's Day. It happens. These guys got overwhelmed with all this sudden surge of business. I know how it is, but if you guys are having issues, I'm going to try to get you to the front of the line. Go to my Discord. Send me a message, Matt, and just tell me your experience, what's going on. I'll kick your emails right up to ownership, the owners pretty quick, and then we'll get ready to go with that. I got you guys. And like I said, they're very eager to help. They're not like, dickheads over there. They're listening, and I'm basically like yelling at them with all these cool ideas. And they're completely like rapidly just hiring people and changing policy. And like they're basically getting, situated, and like little things like this happen. We understand. They hit the prop firm world with the splash. I mean, every influencer picked up a funded next code, and we're pushing them all last week in that sale. They probably have hundreds of thousands of new customers, like in a week's time. It's crazy. So I get it. Which account on the Elite Trader Funding's 50K? One step, they're all good. So what you have to do is you have to go to divide. I've got like a minute to answer the question. What you need to do is when you're comparing products, you're going to go to, and you got to do this math because I won't have time to answer it and do it fully. There's that kind of red line-ish resistance, guys. You see that? We didn't tap it automatically, but that's where the exit target would be. You guys traded the red line. Good job. I'm excited and happy. What you're going to do is you're going to take your drawdown to cost ratio and do the math. This divided by this when they have a sale especially, and it'll give you a ratio. 3,000 divided by 20 is 15, right? 2,000 divided by 16 is like roughly 16, 17, I don't know, whatever that is. Do the math on each one of these and find which one has the highest ratio. The highest ratio of drawdown to cost is the better value. You're getting a bigger account for the money you're spending. The drawdown is the account size. So that's the math you need to do just to set. All right, guys, let's head over to My Funded Futures and everybody go in there, start hyping them up before we get started. Tell them Matt sent you. Tell them we love you. Rocket Scooter in the house. Post rockets in chat. Matt, you know the rules. Say Rocket Scooter, yeah. Whatever you want to do, head over here. We'll be live in about 5 minutes there, and they do a shit ton of giveaways on that stream, on our segment, man. No guarantee they will, but they have been blessing us with giveaways. I pivoted early, Moro. Yeah, after MFF, I'll be live. I'm coming back live.